for as a small DSA, now reaching to this place, it's speaks the volume of India, right? The India's democratic setup, the Indian entrepreneurship, India opportunity, Indian economy. And I think I am the biggest beneficiary of all those things. And we've been irrationally rewarded, honestly, because this in principle approval, it just has made us more energetic, more motivated, more inspired that, we can do much better now, from here onwards. So I'm thankful to every Indian, to be very honest, that, your support, your guidance has really made us what we have as of now, and we believe that we'll make this very big, in times to come.
One of the questions which was asked is this 18-month period of transition, right, from in principle to a full license. And one of the conditions laid down by the regulator is to transfer your and your family's ownership into a non-operating holding structure. Are you confident of doing that before this 18-month period, or do you think that entire time frame is needed?
So, Vishy, we just got this approval last night, and you have to excuse me because we haven't gone into much modalities and legalities around it. But I think regulator would be knowing it that it can be done in some phased or some time-bound manner, because that's why they have given us 18-month period. So I strongly believe that we should achieve it before that only. So I don't think much challenge there, because on the face of it, this structure helps me a lot, because as an entrepreneur, my holding was in my personal names, which was not allowing me to free me up, right? So, but I think transferring this holding to a structure will allow me to do more activity, So I think in the end, I would say that it will be only beneficial to us.
In terms of the business model, now you've said earlier that for the next 3 to 5 years you're going to continue doing what you're doing, and then maybe look at other, the previous lot of bank licenses that went out. Some of the lenders took some decisions which did not pan out very well. How are you seeing that journey of transitioning to the universal bank and your business model?
I think not much will be done. If you ask me, we are a scheduled commercial bank. We are 100% compliant with all regulatory requirement. I think this license will do a couple of things for us. One, I think the momentum will be in our favor, because I have seen much curiosity from last night that who is AU, what is AU, what they do, whether now they are a full-fledged bank. I think the customer attraction towards us will go up. That eventually will help us to reduce our cost of money, can have more opportunity around our asset build-up. So that will happen, in my opinion, very quickly, And second, I think with the over the period, when I am with this status of universal bank, with this kind of legacy of maybe around 30 years, people will react very differently with us. As of now, we have to struggle a lot in terms of explaining us. So I think that will ease up a lot of things internally. We are moving towards Mumbai, So Mumbai is the heart of the whole banking as such, right? So we'll be operating more over from Mumbai. So I think pan-India opportunity, going even beyond India, and beyond, even the present structure. So I think I would say that still very early time to react me on that, but it makes us on the top of the league. So the whole how to express yourself will be better suited to us now.
Two questions, sir, and I'll wrap this up after this. But you talked about a change in terms of your diversification over the next 10 years. You want to ensure that your businesses are not more than 15% in a given state. Yeah. Rajasthan is your home state, of course, so currently it's heavily towards that side, 26% or so. I want to understand the journey. So is this largely by expanding into more states or expanding your businesses in the current states that you're in?
I think both. So my wheel business, is close to 25% in Rajasthan, right? So, but now the next growth of wheel business won't be coming from Rajasthan. Rajasthan would only grow in the range of 10%. But I think the other state will grow in the range of 30-40%. So I think one product will grow differently in different states. And of course, new product, maybe more in our comfortable states, right? where we have more comfort, right? So I think it's a both strategy, but in a long run, we'll have more diversified in all sense, the product, the people, the geographies, so that we remain very sustainable in that sense.
Understood. And my final question is with respect to the management strength at this point in time, right? This was a question I asked you earlier, which is how are you seeing that aspect of your business? Are you planning to add on more talent, or do you think the current talent is good enough?
No, it's a continuous process, and I think there is a huge pull towards us, and would have hired close to 100 senior leadership in last 5 years from the existing setup, right? From the existing banking setup of India, right? So I think it's both way, where we promote internal talent also to a senior position, and wherever we find a gap, we want to hire people from the outside so that we remain very formidable team.
Sorry, one point on the cost of deposits. I just want to understand that. Do you think the cost of deposits will go down materially? Currently, you're offering about 6.75 on the savings account.
Okay, so difficult to define material word, right? But I think over the period, if you are a universal bank, you're not in the SAB category, I think customer trust will be more on us. And if they can give us more money, we can actually negotiate our cost of money, right? So I believe so.
Welcome viewers, you're watching NDTV. I'm Harsh Saita. We have with us the Managing Director of GICRE, Mr. Ramaswamy Narayanan, joining us at this hour to talk to us about Q1 FY26 earnings and, more interestingly, the outlook for FY26. Welcome, sir. Great chatting with you. Great, always good getting an understanding from you. So I want to first start off by understanding what the trend with regard to the combined will be, because that combined number came in as a bit of a surprise, a positive surprise, I must say. I'm trying to understand whether that number is sustainable, Q1 specific next year, as well as FY26 as well. Give us that perspective.
Yes, I mean, the performance has been good. So if you see, the gross premium kind of stays flat, but then there are reasons for that, because I don't think really both the quarters are comparable. Last year, the quarter when it was taken, the premium was booked for the same quarter, so to say. In October, IRDA came out with the change in accounting, where long-term policies, the premium had to be apportioned over the years. So which means that for this quarter, the premium that you see, especially for the long-term policies, are apportioned. We have only taken the premium for this quarter. That being the case, the premium looks lower, especially in the fire class of business, and that is where it looks flat for this quarter. But then, honestly, there has been growth, especially on the international business. On the combined, yes, thank you for saying that it was a pleasant surprise. For us, I don't think it was a surprise. It is something that we've been working on for the last couple of years, trying to ensure that the business that we write is profitable, the margins that we get in this business is good, and that we are able to sustain this quarter on quarter, year on year. So to come back to your point, whether this combined ratio is sustainable, I would say yes. We finished last year with 108.8. We are currently at 106.95 for this quarter. And that is typically where we would want to be, around 107 by the end of this year. Essentially, we've always tried to bring down combined ratios by about 1.5%, 2%, depending on how the losses work out. And if you actually see, this quarter is really good from our perspective, because it is not as if there have not been enough losses in this quarter. Yes, there were no catastrophic losses. That is something that we would expect for the first quarter of the year. But then there have been two big extraordinary losses that have hit this quarter. One is a fire loss from a company called Jindal Polyfilms based in Nasik. It was for a 100% loss, it was 2,300 crores. GIC's share is 925 crores, which we have already provided in the first quarter. Second, of course, is the very tragic accident that happened with Air India at Ahmedabad. So obviously, we have provided for that as well. We have a 5% share on that fleet. So we have provided for that as well. So there have been losses in this quarter, big losses. And in spite of that, the profitability is good, the combined ratios are good, and overall the PAT has gone up by about 70% quarter on quarter.
Got it. So to some extent, and thank you, you've answered a couple of questions rolled into one. But with regard to one particular piece, it's the commission expense which also has been optimized to a large extent. Talk to us about what's happened there. What explains this very steep fall? Even when I'm looking at it percentage-wise, even absolute number, both.
So what happens is the percentages normally get worked out at the time of the renewals. And what happens is, we work out the commissions based on the profitability of the treaty. So normally these commissions would start at a particular level, which is at quarter one. And then going forward, depending on how the treaty is performing, the commissions would go up and down. So depending on how the treaty performs, in case it is very profitable, the commission levels would go up. So that is something that we would also be monitoring going forward for each of the quarters. But I do believe that the way we are looking at profitability, the kind of treaties that we have written, which we want it to be profitable from a claims perspective, going forward for the rest of the quarters, I would expect the commissions to slightly go up, definitely over the next 2-3 quarters.
Understood. So you expect some bit of expansion. Where should it normalize at, sir, in terms of percentage of premium income?
I would say around 18% is what we would look at commissions at the current juncture, because we are trying to get loss ratios down to about 82, 83 levels, and that kind of matches up to what we are looking to do.
So this is largely a one-off, from what I understand. Do I understand that right? This 10% number, which is, or rather sub 11% kind of number in terms of commissions percentage as percentage of premium, that's a bit of a one-off.
It is a bit of a one-off. It also means that we are slowly shifting our base from writing proportional treaties to non-proportional treaties. Proportional treaties obviously have a commission component. Non-proportional treaties do not have. So again, it also means the growth that we are seeing on our international business, which is more to do with non-proportional. There are multiple factors which really play in bringing this commission levels down. But yes, I would say this is really a one-off at this point of time. Going forward for the next 2-3 quarters, we would expect commission levels to go up, but we would also expect loss ratios to come down. So overall, the combined should remain where it is.
Got it.
All right, welcome back. You're watching NDTV Profit, and this is India Market Close. I'm Mahima Vacharjani. That was the conversation that we had with GIC. Now, before we move on to the interesting piece that we've planned for you today, let's take a quick check on how the markets are doing at present. Quickly, the Nifty 50 trading with a cuts of about 0.7%. The Bank Nifty also seeing cuts of about 0.6%. The broader markets also under pressure. The mid cap 150. Let's try to pull that up. The mid cap 150 and the small cap 250 as well. Down, mid cap down almost by 1%, trading at today's low point. The small cap 250 also down by about 0.7 odd percent. But like I said, we've planned a special piece for you today, and the stock that's been flying in trade for the past 1 month is Sarda Energy. And today it's seeing some profit taking, a little pullback that raises the burning question that is it the right time for you to enter the stock or not. In our special offering, the Profit Deep Dive, we dissect and decode exactly that. Varsha is here with more on that. Varsha?
Right. Thank you so much for that. So as you rightly said, stellar stock returns that Sarda has given to its investors. If you see, the stock is up 26%, 20 to 26% post Q1 FY26 numbers that the company has put on. Let's see what's driving this rally. First is stellar Q1 FY26 earnings that the company has posted. Net profit more than doubled, and if you see, revenue is up almost 77% year on year, and they've reported highest margins in at least 12 quarters, which stand at around 37.8%. If you see, power business is one of the reasons why investors are actually bullish on this company, because power business have aided the upside, and they've seen a strong volume growth across most of the steel products. Now let's see what is the next leg of growth. When it comes to Sarda Energy, they have done a strategic shift strategic shift to an energy powerhouse. So they're diversifying their portfolio in power business, and 67% of EBITDA, if you see, is from this power business. And and how they're doing this, so they have successfully acquired and merged SKS Power. So through SKS Power, they are basically riding to the power sector, and the power capacity because of this acquisition is expected to rise 980 megawatt, and the new hydro projects and planned expansion also offer stable and high margin revenue as far as Sarda Energy is concerned. And also, if you see, the focus on growth capex remains clear: power and coal. Onto the SKS power plant, if I were to talk about, it has a potential to double capacity over time. One is that, and because of this, because of the SKS plant, if you see, the plant load factor improves with target of 80 to 85% for FY26, and the total power capacity, as I was saying, will rise 980 megawatt with this acquisition. And the new Rehar 1 hydro project offers stable and high margin revenue. Now let's see, because of this acquisition which they did, which they did in August 2024, how has the numbers pan out? So a good uptick, when it comes to revenue from September 24 to June 25, if you see. And the interesting part over here is margins. Look at the margins from 29%, though there was a downtick in December 24 and March 25, but a huge uptick in margin from 29% to 38%. And this is one of the reasons why, if you see, when it came out with the numbers, the stock was up 20%. And profit also, if you see, from 200 crores to 437 crores. So good uptick when it comes to margins and profit. Now, the power business is not only the reason why this company is in focus, but there's the mineral business also, which is aiding the business. They are expanding their coal mining with new mines in development, and this will reduce their reliance on expensive imported coal. That's the good thing, which will also aid margins for the company. And they operate iron ore mine that means about 35% of their needs. And the new JV block, when it comes to iron ore, is also secure for future flexibility. Now onto the steel and ferro business future outlook, if I were to talk about, no large scale steel capacity additions have been planned in future, and the targeted projects, if you see, 50 megawatt of solar power installation is ongoing, and the steel margins is expected to improve from current 18%. So the backward integration that they're going on will actually help on to aid margins. And the Chinese steel export, if you see, pressure remains a key industry risk for the company. Onto the power and mining business future outlook, if you see, major ongoing capex projects include 800 megawatt power plant expansion at 8,000 crores, number one. And also, if you see, the expansion is across coal mining business as well. On to last, if I were to talk about, so we all spoke about the good things about the company, about the power business, about the mineral business, but the key aspect which we should talk about is the risk. One is the Q1 summer power price realizations was at 6.16 per unit, and company has guided an annual average of about 5 rupees per unit. And the long product steel price remains under pressure, one of the risks that the company faces. And lastly, if you see, Chinese steel export pressure and global pricing are some of the key risks that one should watch out. So overall, if you see, I would say Sarda Energy is going from minerals to megawatt, I would say, and the power business is the next leg of growth when it comes to this company.
Well, thank you so much for that, Varsha. That was extremely detailed. Opportune time to bring in Nilay Joshi, Executive Director at Sarda Energy and Minerals, joining us at this hour to speak to us about, of course, the future prospects. So first off, let me ask you with regard to Q1 FY26. One was, Varsha was highlighting, and I'm sure you heard, realizations were higher than the 5 rupees which you've guided for. How sustainable is that? And how much of that has had an impact on both your top line and margins? Give us a perspective.
See, power realizations, as you know, they are seasonal, right? So Q1 is the best realization as far as thermal is concerned. But we have a healthy mix of thermal and hydro. So while I mean there are certain quarters or certain parts of the quarters where you will get excellent thermal realization, which is Q1 and maybe parts of Q4, and maybe somewhere in between 1 or 2 months. So 5 to 6 months you get excellent realizations in thermal power. But Q2 is where you get excellent hydro generation. So as we have around 170 megawatt of operational hydro capacity. So things will balance out. We expect that the realizations on an average should be in the range of 5 to 6 rupees. Another perspective that I would like to give on realization is that I mean, I'm not talking of like immediate quarters, but as a strategy, what we are thinking is to lock a large part of the SKS, the thermal capacity, into PPAs, longer term PPAs, so that the variability goes out of the numbers.
Okay. Mr. Joshi, hi. Mahima also joining this side. Sorry, so you were saying something, Mr. Joshi?
No, I said I hope that clarified on the power sector.
Definitely. Mr. Joshi, thank you so much for that. My question to you for the overall presentation that Varsha gave, I think the key aspect was the kind of margins that you've done this particular quarter. That's almost at 38%, your operating margins. Do you think that kind of margins are sustainable going forward, or what would be the normative range of margins that you'll be in when it comes to FY26? Mr. Joshi, can you hear me? Yeah. Okay, I think we seem to have lost his feed, but let's try to pull that stock up. Let's see, there's some profit booking that we are seeing today, but the kind of rally it's seen in past 1 month, if we can try to pull that up, it's been an interesting move altogether. But the stock seeing some pressure today, that's with regards, there you go, 1 month it's seen an uptick of 26%, but today some profit booking on the cards down by about 3.8%. So
fascinatingly, Mahima, 800 crore of the 1600 crore top line, which is nearly 50%, has come from power. So power is starting to occupy a bigger part of the pie when it comes to revenue. Also your EBITDA, a larger part of that is commanded now by power. So gradually power is taking center stage when it comes to this company. The metal segment it has posted a steady performance as well. So it's a twin engine which has worked for the company. They've raised around 1,000 crore of debt as well for capacity expansion. So at least that is with regard to the Q1 numbers, and that's probably one of the key reasons that we've seen the kind of move on the stock that we have. But we've lost the management, so we'll just have to wait maybe for them to patch back in. But what we'll do in the meantime is slip into a very short break, and on the other side we'll continue discussing stocks, maybe Sarda Energy as well, with our fundamental analyst, and a Heard on the Street at 3:30. So stay tuned for that.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए ये तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
after our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy time
ICICI
CDSL
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Hello and welcome to India Market Close. Markets are at the day's low, but will be quite different if we see the kind of rally we saw yesterday. That move obviously was expiry led, but today also a very similar structure to what we were seeing yesterday at this time. We saw that little bit of weakness at the start, and thereafter it's been very range bound in the way markets have gone. We're very close, if not just off the day's lows. So 388 and we're currently at 405, so roughly 17 odd points from that low point of the day. Anyway, so that's on the Nifty, and let's pull up the heat map on the Nifty as well. The Nifty Bank also reflecting a very similar texture in the way it has reacted. Some different winners today versus what there were yesterday. NTPC, Titan are two of those which are standing out in trade. Again, Titan on the back of those numbers that it declared. Trent also holding up fairly well. So some of the consumption names doing decently well on a day like this. What's not doing well is something like a Bharti languishing 3% lower, and IndusInd Bank as well 2% lower. Grasim again numbers out, stock down nearly 2% on the back of that. So it's still tilted towards the way earnings and numbers are reflecting, and that is to some extent tilting the screen. Let's look at also the sectoral heat map, and that'll give us a sense of what are the movers. Would not be too surprised with the way this is shaping up. Only oil and gas in the green. Outside of that, not too much. Metals and defense. Defense was the key sector which was under pressure yesterday as well, continues to remain under pressure today. Realty is the other one. We saw pressure on that one yesterday as well. The Nifty Bank largely in line with the Nifty 50, and the PSU Banking Index outperforming just a wee bit with the way this is playing out. IT is down 0.8 as well. So all of that is obviously pressuring the Nifty. The Nifty Pharma down 1%. But let's pull up the advanced decline before I toss it to Mahima. For the broader markets, the advanced decline looking much better than yesterday. But nonetheless, you are seeing pressure in broader markets, Mahima.
Absolutely, Harsh. Pressure in the broader markets in terms of the mid-cap 150, it's, in CS pressure down by about 1.15%. But the small-cap 250 is almost in tandem with where the benchmarks are. So it's down by about 0.8 odd percent. With regards to where some counters are concerned that are buzzing in trade today, something like Kalyan Jewellers, which is seeing a significant amount of beating 8% as we speak. There are some other counters that are under pressure. If you can try to pull up the BSE 500, there's PG Electropras on the back of its earnings down 11.5%. Datamatics also seeing a downtick of about 7% There's Subro's, Data Patterns, Signity Tech are some counters. Even Coforge seeing cuts of about 6% in trade. Jindal Stainless, even VIP Industries continues to be under pressure. Posted its earnings yesterday down by about 5%. Ramco Cements also down by about 5%. KIOCL, Unichem, some counters that are putting pressure in terms of where the broader markets are concerned. And some counters that are doing well. There's Kalpataru Projects up almost 8% as we speak. Sangvi Movers 8%. Global Health, GSFC all on the back of their earnings. Also PT Engineering and GIC doing well in trade today, up by about 5%. But it's 2:30 and that means it's time for our special segment, Heard on the Street. My colleague Somit Sarkar joins us with all the chatter from the dealing room. What do you have today, Somit?
Well, multiple stocks remain in focus. Firstly, it's HDB Financials and Kalpataru, the recently listed companies. Now, dealers are indicating that there are buy flows on larger Chennai desk. They have been accumulating both these counters. In fact, for HDB Financial, they're also saying that the stock is below its IPO price. So keep an eye out for both these counters. For EPAC Durable, the stock has gained over 5% in trade, and there was a large block deal that has happened. Around 41 lakh shares changed hands. Now, this is not the last of it. There will be a couple of other blocks that is expected to come in of more than around 1 crore odd shares. But this will be the last chunk of block that is expected in EPAC Durables, and that's the positive news that is coming in for EPAC. For Kalyan Jewellers, dealers indicate that a large mutual fund, who is the largest shareholder in, among the mutual DIs in Kalyan, is a seller in trade today. And that's the reason the stock is down around 8% post reporting a strong set of numbers. Prestige, if you look at, there are buy flows on DI desk is what dealers are indicating. That stock was down over 2.5% in trade, but then had a smart recovery. Right now it's down around 1.4% in trade, and dealers are expecting some positive deal announcement that could come in, or deal transaction that could come in anytime soon when it comes to Prestige. And lastly, when it comes to JSPL, that is Jindal Steel and Power, dealers indicate there are sell flows on HNI desk on anticipation of some delay in their capital expenditure that could be announced. So keep an eye out for JSPL as well.
Prestige is a fascinating one, Samit. Any indication, any hint with regard to the nature of this deal? There is some amount of value unlocking which is in store with regard to where a Prestige is concerned. What could this deal be? Any color?
No color on what this deal could be, but definitely it will be a positive one is what the dealers are indicating.
Okay, so possible positive triggers there. The other one I'm fascinated about is Kalyan Jewellers. So much pressure on the stock. Is it all volume driven? I'm not sure if you've seen the numbers or you have.
Well, numbers were actually good. It's just that the street was a bit spooked when they announced that manufacturing entry. So they believe that the company is shifting their model from asset light to asset heavy, though the company has clarified that they won't be getting into manufacturing, so they will continue to remain asset light. But the street is a bit spooked for that also, and then there's this big chunk coming in from the mutual fund.
Okay.
Yeah.
All right. Let's cut straight across. There's the SBI presser, which is happening. Of course, more on all of those stocks in just a bit.
Financial performance for Q1 financial year 26. Over to you, sir. Good afternoon, ladies and gentlemen. Thank you for joining the press meet post announcement of Q1 FY26 results of the bank. The results for Q1 FY26 highlight robustness of financial numbers, continued excellence, consistency, and SBI's significant long-term strengths. I would like to start by thanking all our stakeholders, including our customers, shareholders, employees, and the broader ecosystem for their support and helping us in creating sustainable value for the economy. Let me now start with a brief description of the present global and domestic economic scenario and then discuss bank's performance. The global macroeconomic environment has remained fluid since June till now amidst geopolitical tensions and tariff policy uncertainties that have increased. Central banks in many advanced economies kept policy rates unchanged, except, of course, Bank of England, which has reduced the rates. The last mile of disinflation turned out to be stickier than expected, while also awaiting clarity on the trade tariff front and its implications for inflation. Domestic economic activity held up in June, with high-frequency indicators pointing to mixed signals of improving prospects of Kharif agricultural season and continuation of strong momentum in the services sector on one hand, and deceleration of tax collections, industrial activity, and vehicle sales on the other. RBI estimates GDP for FY26 a growth rate of 6.5% and inflation at around 3.1%. The MPC in its latest meetings, as you're all aware, has kept the repo rate unchanged at 5.5% and maintained a neutral stance. Coming to SBI, the results for Q1 FY26 demonstrate the bank's continued ability to operate profitably at scale due to our substantial core strengths. These advantages stem from our institutionalized framework, which is guided by continuous improvement in processes and a commitment to fairness for all stakeholders. The total deposits have grown by 11.66% year-on-year to 54.73 trillion rupees. Term deposits have grown by 14.23% year-on-year. Our current account deposits have grown by 30.69% year-on-year. And CASA deposits have grown by 8.05% year-on-year, with a CASA ratio at at 39.36%. Importantly, the current account growth has continued to remain strong for the bank during the year despite competitive market environment. Our foreign offices deposits have grown 10.42% year-on-year. I'm glad to share that the credit growth continues to be good with segments like SME, agriculture and retail personal banking posting healthy double-digit growth at 19%, 12.67% and 12.56% year-on-year respectively. The corporate sector has grown by 5.7%. Our foreign offices advances have grown by 14.81% year-on-year. The domestic credit deposit ratio was at 68.88% at the end of Q1 FY26, indicating sufficient headroom to address future growth requirements of the economy. The bank continues to demonstrate industry-leading asset quality at this scale. The slippage ratio for Q1 FY26 was 0.75%, while the credit cost for Q1 FY26 stood at 0.47%. The net NPA ratio improved by 10 basis points year-on-year and stands at 0.47%. We have a well-provided NPA book with PCR at 74.49%. The asset quality of the bank has continued to remain strong over the last 5 years, which demonstrate the quality of our loan portfolio, the robustness and improvement in our underwriting processes, and improved collection efficiency. The bank remains well capitalized and our capital adequacy ratio has improved by 38 basis points sequentially and by 77 basis points year-on-year and stands at 14.63% against 14.25% as on 31st March 25. CET1 ratio has also improved by 85 basis points year-on-year to 11.10%, and both the ratios are well above regulatory requirements. Based on the current profitability and growth trajectory of a bank, we believe we have sufficient headroom to take care of requirements of business growth. Bank has raised, as you're all aware, equity capital of 25,000 crores during the current quarter, which will support additional loan growth of approximately 2.5 trillion rupees. I'm glad to share the progress we have made in the digital banking, which is an ongoing journey, and it continues to be an important customer acquisition engine for the bank across asset as well as liability products. The share of alternate channels in total transactions increased from 98.2% in Q1 FY25 to 98.6% in Q1 FY26. More than 9 crore customers have registered on YONO, with 66% of regular saving accounts opened through YONO in Q1 FY26. Our subsidiaries are consistently performing well and continue to create significant value for all the stakeholders. Most of our subsidiaries are leaders in their respective segments. We will continue to nurture these subsidiaries and maintain leadership position in the respective businesses. The bank continues to report ROA and ROE greater than 1% and 19% respectively at the end of Q1 FY26. We reported total assets worth 67.69 trillion, total advances at 42.55 trillion, and total deposits amounting to 54.73 trillion. SBI continues to be the leader in all the risk-adjusted profitable lending and liability pools in India. Consequently, SBI's ROA above 1% is derived from the scalable fundamentals of banking. That is, improved business growth, controlled operating expenses, and maintaining robust credit quality. The bank's ROE profile is currently higher than its credit growth, implying CET1 accrual in the future. From this strong position, our goal is to consistently achieve a ROA of over 1% and ROE over 15% through the business cycles. To conclude, I thank you all for your continuous support of the bank. We consider it as a privilege to be able to play a role in driving the progress and contribute towards the growth of our economy. We remain committed to rewarding your trust in us with superior sustainable returns over the long-term horizon. I wish everyone here the best of health and happiness. My team and I are now open for taking your questions.
Thank you, Chairman, sir. We'll now move on to the media question and answer. To ensure a smooth and orderly session, questions will be taken in a sequential manner and individuals will be called by name to ask their questions. We kindly request everyone to follow the format and limit themselves to 2 questions focused on the results. If time permits, you may raise your hand to indicate interest and we will accommodate additional questions. Thank you for your cooperation. We will begin with Hansini from Money Control.
Hi, thank you. So overall, in terms of growth, 11% is very satisfactory. But when we look at corporate side alone, there has been a pullback in growth in particular segments like infra, telecom, road, aviation, tourism, etc. What is your view right now on the corporate lending space, particularly with respect to these segments where I called out? Where are you pulling back because you're believing that there is stress accumulation happening or avenues are not as attractive as you would want them to be?
The three reasons why the corporate growth looks a little muted in our books. One is there is some shift towards market instruments. We have seen that the utilization of working capital limits, which was 62% in Q1 of FY25, has come down to 58% now. Which means that, and we also have seen that some of the large corporates accessing the CP market, basically to replace the working capital limits. And that is expected because there's good amount of liquidity and in the CP a diversified participation what we have seen. Not necessarily that it's banks which are lending on the CP market. Essentially the mutual funds are very active on the CP and the rates are much more affordable than the bank lending, obviously. That shift has happened, but I think these shifts keep happening on that. And once the rates stabilize on the bank side, they will come back to utilization. The second thing what is happening is in terms of some of the project, like we have very robust visibility on both on the pipelines in terms of proposals which are under discussion and also sanctions but yet to be disbursed. We have almost 7 lakh crore worth, both segments together. Proposals in pipeline as well as sanction but not disbursed. But the disbursements are taking time, while the repayments are actually active.
Right, we'll keep you updated with regard to the SBI presser. Bottom of your screen, you have your the latest update with regard to that presser, so stay tuned on that. But on to a quick check with regard to SBI's numbers, because the stock took a bit of a dive and thereafter has made a full recovery as would be expected. It was an inline set of numbers, nothing at all of worry as such from the numbers. The net interest income in line with expectations. Growth was approximately 0.8% on a sequential basis, around 11+% on a YOY basis. You saw other income which grew 55% YOY, which is what has aided the operating profit. So the operating profit was a beat by around 11 odd percent. And thereafter, provisioning absolutely in line with the consensus estimates. Profitability got a lift because of other income and provisioning being in line and other income being above. You saw a lift with regard to where profitability is concerned. So that's how it played out. And the growth also was not as bad. It was okay, just about a sub 12% kind of growth. But let's discuss this a little bit further. We have Neeraj Diwan with us, independent market expert. Also joining us is Kunal Shah, senior tech and derivative analyst at Mirae Asset Sharekhan. Let me come to you first, Neeraj. With regard to SBI, how do you view the numbers? A 1.1% ROA was slightly impressive in a quarter like this, right?
Yeah, good afternoon. Yes, definitely the numbers have been in line, and 1.1% ROA is very good for PSU banks. And plus, there is the possibility for going ahead. That is what we need to now look into, because this quarter we're already into August, so we have to see what happens in the current quarter and the following quarter, because demand for credit has to go up. So that is what should happen now with the interest rates lower, and with transmission of interest rate should happen now. And liquidity also is ample in the system. So going ahead, if demand picks up towards the festival season, I think the pressure in NIMs should also subside slowly, and you will get improvement getting ahead when credit demand picks up. I think that is what we need to look for now after the numbers have been declared today.
Okay. All right. Kunal, your quick view on SBI before I take your view on the indices as well as your topics.
I think SBI, if you look at in this volatile market, it has been only consolidating at higher levels. So clear-cut relative strength is visible. Now, till the time the stock is trading above 780, where the stock has taken multiple time supports, the view remains bullish. And the real momentum will start once we break the 20 DMA on the upside, which is at 810. Once that is taken out, then we will see momentum coming back, where SBI can go towards 840, 860 on the higher end.
Kunal, your picks for this afternoon?
So overall, we feel that the market still there is downside left on both the indices, Nifty and Bank Nifty. So the trend continues to be on the negative side. We expect Nifty to test 24,000 on the downside, which is where the 200 DMA for the Nifty index is placed. So we expect that to be tested. And even Bank Nifty continues to be as a sell on rise mode. The immediate support is at 54,700, which is the 100 DMA. And once that is taken on the downside, then you can expect further downside towards 54,000 mark. So overall, sell on rise mode for both the indices. Nifty, the resistance is 24,700. Till the time we are trading below this mark, the view remains negative. And for Bank Nifty, it is 55,700. Till the time we are trading this mark, the view remains negative. On stock specific, I have two ideas. One on the buy side. Buy side, I'll focus on NTPC. I think in this volatile market, this has been one of the stocks where every dips has been bought into, and we expect further momentum to build up on next week. So this is a buy over here. Keep a stop loss of 320. Look for targets of 350 to 360 on the higher end in the upcoming week. The second is a sell, and the sell is on Amber Enterprise. The stock has given us a breakdown below the 20 DMA, and the structure is getting weaker and weaker day by day. So that is looking on the sell side. One can keep a stop loss of 7,700 on the upside and look for targets of 7,200 to 7,100 on the downside.
Okay, so that's all right. So those are the couple of picks coming through as well. A couple of gainers really standing out today. Kunal, let me stick with you. And NTPC is one of them. What are you seeing in terms of a trend? This one has been subdued for a while now. So what's the take?
I think that is what my first buy call was, NTPC, which when I said, so I think NTPC looks strong to me. 320 is a strong support for the stock. You can expect at least 350, 360 coming in the next week.
Okay. And what about a Kalyan? What's happening there, Neeraj? Give us your view. In your view, Neeraj?
Yeah, on Kalyan Jewellers?
Yeah.
Okay. So basically, I think it's jewelry stocks are one one sector which I'm really not too positive, and I don't really track these stocks. So besides Titan in this segment, I am not really too comfortable in commenting on any other jewelry stock.
We'll come to you on Titan, but Kalyan is surely our stock of the day because of the reaction on the counter, and it's a stock in focus. Stock has faced pressure in trade today despite a decent Q1. What's putting pressure on the stock? Mahima is here to give us all of that. Mahima.
Right. So, as you rightly mentioned, the numbers were good. Overall, the quarter shaped up good in terms of the operational metrics also, there was no concern. But I think there are some concerns with regards to where commentary is concerned and the things that probably investors not happy with. The first one being higher capital infusion for the new pilot project. That is something that is on the cards and probably the street is not appreciating that. The second one being debt reduction has been put on a pause. Now, the year gone by, they have gone out and given a clear road as to how debt reduction will take place. But this quarter, they've said that debt reduction will be on a pause and other expenses plus interest and depreciation has gone up quite a bit. Let's try to understand each of these points as to how that's shaped up. In terms of the higher capital infusion, well, they are basically working on a pilot project called lean credit procurement, and this if they implement countrywide, they've gone ahead and said that that might drive higher margins and ROC, but will require a capital of around 1500 to 2000 odd crores. So that is one thing, and this will be done via equity and debt. Combination of both, the clarity is still not there on that. So if they go ahead and further infuse debt, that will only put pressure on their overall debt. In terms of the new strategy in the regional brands as well, here what they're doing is they'll be putting up regional brands together and opening 5 new stores in one particular state, and for that also they've said that they'll require around 300 crore of working capital. So that's also a big chunk, and in terms of where this amount will come from, that is, there's no clarity on that. Will it be through internal accruals or they'll be going ahead and borrowing? In terms of the new setup of park in Kerala, now they've received a land at a subsidized rate of 5 crore from the government to support the business. But they're going to set up a plant there where they're going to get suppliers that will work for them and also get hallmark done from there itself. Now, there's no clarity as to how much capital infusion they'll do here, but that is also looking like a big project and might require capital going ahead. In terms of the debt reduction, they've said that they've paused the debt reduction for future, and we'll have to see as to how the capital infusion is done and whether that will lead to higher debt going forward or not. In terms of the overall expenses, ad expenses have gone up by 12%, other expenses up by 39%, interest cost has already inched up 22% a year-on-year basis, and depreciation has gone up 29%. This is despite of them shifting to an asset-light model is what we are seeing right now. Of course, they're in the transitioning phase still, but depreciation is going up. Lastly, in terms of where the numbers stand, of course, not a bad set of numbers as I mentioned earlier as well. But I think overall these are the 3 key reasons as to why probably investors are not liking. Of course, that's Soumit rightly mentioned in his khabar as well, heard of the street, that it might be on the cards that a possible broker could exit the counter.
Yes, a possible large AMC looking at a exit on this one was what Soumit had reported earlier today. Kunal, is that being indicated from the volumes that have come through today on Kalyan Jewellers? What are you seeing in terms of action, and what should an investor holding a Kalyan Jewellers as of yesterday do? Give us your perspective.
I think currently, overall, if I look at the long-term charts, the structure continues to be on the weaker side, where the correction which started from the top at 750 towards the mark of 420, this was the pullback which got over into the stock, and there is a resistance exactly faced at the mark of 600. So now till the time 600 is not taken out, the view continues to be on the negative side. It's a sell-on rise mode. If you get any technical bounce, since the stock is already down by 8 to 9%, any technical bounce what you get could be an opportunity to exit. You can expect further lower levels. The next support on the downside is what I see around the zone of 500, 495. So the stock can slide down towards those marks.
Neeraj, your take on Titan? That was the view you wanted to give?
Yeah, I'm positive on Titan. Even kind of result they declared, a very good set of numbers, good growth, good margin improvement. And, as we go towards the second half of the year, towards the festival season, I think the demand should pick up going ahead. So Titan should be one stock which can be kept in your portfolio, to give a decent return for the rest of the year.
Buying at this level?
Yeah, I think even at these levels, one can get a decent return at good levels. Even after the little bit of, it would have shown a better improvement today if not for the kind of markets we are in. So the reaction today is not what these kind of results, would have got. But I think if markets improve a bit going ahead, I think they can get better returns from that.
And slightly on the back of the commentary as well, because going forward, Q2, Q3 might be under pressure, and this would be because of higher base in the earlier year of custom duty reduction and all those effects. So that could also be one of the possible reasons as to why we did not see a significant uptick in the counter as well. Now, another stock that is in focus is KRBL. The stock is up more than 12% as we speak. There you go, 15% on the charts there. And this is after posting a robust Q1 numbers. In fact, we spoke to KRBL CFO Ashish Jain about the company's revenue target going forward. Listening to what he had to say.
When we look at Basmati as a category, packaged Basmati is sold in the country in roughly 7 lakh outlets. Now, when you compare that with the reach that some of the more established consumer product categories have, it's really a fraction. Within that 7 lakh, we reach approximately 4 lakh outlets. So being market leaders, we are still not covering the entire base. So one of the initiatives that we're driving on the supply chain side is to grow coverage in terms of distribution. And that is happening across channels, general trade, modern trade, as well as e-commerce and Q-com. Now, from an efficiency perspective, see, while we continue to drive efficiency in the channel, the focus right now is on enhancing coverage. Yeah, so I mentioned earlier, we are looking at 6,000 crore plus revenue as we stand at the end of Q1. We are broadly on track, and rest we'll see how the year goes.
All right, so that was the management of KRBL. Neeraj, any quick view on this counter, if at all?
I think, among the rice companies, this has done well over the years. And, if you see some, because, valuation-wise, I think the stock after the move today is not that cheap also, looking at results that they've declared. But, as a portfolio stock, you can ride the stock, some more momentum. But I won't advise really getting into it after the move today. But if you're already holding it, some more momentum may be there on that side.
So that's with regards to where KRBL stands, but it's time to slip into a very short break, but we'll be right back with all the other action on the other side, so do stay tuned.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बार में खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
Okay, welcome back. Thanks for staying with us. Today, the big bull versus bear debate is going to be with regard to an LIC. Now, you saw a decent set of numbers, right, from LIC, and the growth was quite decent. It was much better than penciled in, at least maybe 5% better than what we had penciled in, and therefore growth in AP was strong. But really, what's the bear case? The bear case is that despite this near 10% growth that they've clocked with regard to AP, what they've done is they've been consistently losing market share. The base is high, but that is of course a concern. For how long can they consistently keep losing market share? Question will be, you want to reverse that and maybe at least hold market share if nothing else. Now the second piece is with regard to margins. Margin uptick was extremely sharp. From 13.9 it came in at 15.4%. Saw 150 basis point uptick in margins. Largely led by favorable product mix, lower expenses, all of those likely to be sustainable. So that's the bull case. But they have guided for a 20% margin, and some of the peers are doing much better than 20% in terms of margins. And HDFC Life does 26, so does an SBI Life, 27, 28%, and therefore the hope is that that re-rates quickly. But it's looking difficult, especially at 15.4 on Q1. So that's the way one looks at it. Now the third piece is with regard to higher focus on non-par. That has really is what has pulled margins higher, the non-participating growth. But they've hinted this quarter that there's going to be a larger focus on participating products as well. They're going to launch a slew of new products. They believe the market needs it and it's a good time to launch is what they've said. So you might just start to see possible pressure with regard to where margins is concerned, even though they've maintained their guidance. Valuations are cheap. Sub one time price to embedded value, in fact, is trading at 0.74 times price to embedded value, which is extremely cheap in comparison to all the other life insurers in the country. But of course, it's a PSU, and the big overhang is the fact that the government of India still continues to hold over 95% in an LIC. That stake needs to come down eventually. Obviously, they can keep getting extensions, but that's the one piece. Now, last off, just on how analysts view this, they see a 19% upside. So they expect LIC to really do well. There are at least 15 plus buy calls, no sell calls with regard to where an LIC is concerned. Let me come to you, Neeraj. LIC, are you positive on this giant in the life insurance space?
Yeah, if you purely see it on valuation as compared to other insurance companies, definitely there's a case to be positive on LIC. Second is that even if they are able to get the margin of 20% around that they are projecting, and then also you can see considerable improvement over the performance that you saw this quarter also, which was also decent. So purely on valuation and the potential, it's very attractive, and it's look a good investment bet. But the only issue, like you also mentioned, is a technical issue that they can be a supply from the government. So there can be some more divestment which may happen. So there will be huge supply which can come because of that. So I think that is one reason why the stock is trading at these kind of valuations. And till that thing is not out of the way, I think this this pressure will stay, and you may not get those kind of returns. But for 10 to 15% return, definitely it makes sense even at these prices.
With regards to where LIC stands, but shifting focus, an important word coming from Nadir Godrej, chairperson of Godrej Industries. We spoke to him about the innovative trends in the Indian chemical industry, with India emerging as a viable hub, and his views on India's response to US tariffs. Listen in and listen to what he actually had to say.
My first question coming to you is, today is the National Chemistry Day Summit. If you could tell us more about this event, what is it and what are the trends that you're picking up in terms of innovations?
Yes, we are at the National Chemistry Day Summit, where we have many people from the chemical industry. We had eminent keynote speakers like Professor M.M. Sharma and Naushad Forbes. Naushad Forbes is very passionate about increasing innovation in India. India spends much less on innovation than many other countries. Professor Sharma also emphasized that India needs to do much more on innovation. We have very few patents. We have very few R&D experts on the boards of companies. And all this could help India's chemical industry go further. It is a successful industry, but we have very little innovation. Very few new medicines have come out of India or new chemical synthesis methods. So it is very important that we emphasize innovation, because if India is to become Viksit Bharat, the chemical industry is foundational, because all other industries need chemicals, and we need to take our chemical industry to one step higher. And the purpose of this seminar today, this conference, is to push the chemical industry to new heights.
Lots that is happening across, but now, sectors which do face global markets are facing headwinds, and that's coming in and getting me to my next question with regards to the way US has come in and slammed another 25% additional tariff, which brings it to 50%. India has responded that we will not give in. We have Prime Minister Narendra Modi, who has come out and said that he is ready to pay a personal price, and that's a strong message over Trump tariffs. What would you have to say in terms of what's happening and the stance that India has taken?
Well, India needs to keep negotiating with the United States. Obviously, if some kind of peace is achieved between Russia and Ukraine, things will be much easier for us. At the same time, this additional tariff will kick in after some days. So there could be hope to do something in the meantime. It's going to be very difficult to negotiate, because India is likely to be very firm on the agricultural.
India will be firm on agriculture and a few other things as well, of course. And that's Nadir Godrej, an important voice. But it's just 20 minutes left for the markets to shut. So we need to focus on a few stocks which are moving. And the one that is down and out in trade today, down 20% as we speak, if I'm not wrong, is PG Electroplast. Now, they've cut the guidance, I presume, 20% on 17 million shares traded already. Need I say more? No. Puneet Johnson to tell us why this has happened. Puneet, did this come out of the blue?
Well, definitely, Neeraj, because in the last quarter itself, they had given a strong guidance of 6,300 crores of revenue that they are expecting in this particular year. Now that's sharply cut for FY26. Now let me just put out the numbers for. They're now estimating 5,700 crores to 5,800 crores in revenue. This was expected to be 6,300 crores in terms of percentage. Now the growth will be roughly between 17 to 19 versus 30% that they were earlier estimating, and this is subsequently put down because of the products business. Now the product business guidance includes the verticals like the air conditioners as well as the washing machine, and this largely seems to be coming from the AC business because the Q1 was so weak because of early onset of monsoons. PG Electroplast doesn't believe that in the next 3 quarters that the company will be able to recover the lost growth in Q1. So for the AC business, which is included in the products business, that guidance has been cut to 17% growth versus 35% growth. So it's a 50% cut in terms of growth guidance from the product business specifically, and that's where the pain point is coming in. They've retained the guidance for the TV segment and that stays at 850 crores in terms of revenue, but the pressure is largely coming in from the product business, which includes the AC vertical. And while they've not given any kind of quantification of which segment, this has to be the AC segment. Overall, in terms of Q1 numbers as well, the net profit is down 19% this particular quarter, and margins have also contracted by 180 basis points. But the company's con call is scheduled at 3 p.m. today, so there'll be some more updates coming in on what they're anticipating in terms of outlook. But largely the product business has taken the sheen of the stock, and any kind of growth aspirations has gone away. The one last thing I just wanted to mention is that the QIP was done at 700 rupees for the stock, and that was just a few months before. So it's definitely going to take the sheen of the stock, and whoever participated in that, the stock's gone to 1,000 and is now back to a subpar of 600 levels. So that'll be something to watch out for.
Puneet, here's the question. Because a lot of other stocks in the EMS space are down today. Now, my question to you is this presumably because of the sharp cut in PG alone, or is this whole feeling around what's happening with Apple, etc., and therefore some of the mobile makers, etc., would be down because Dixon, Keynes, everything else is down today?
I think Neeraj is largely the export story that's getting hit now for someone like a Dixon specifically. Now with tariffs in the US, Motorola is one of the biggest clients, and that was going to be an export story of over 7,000 crores of revenue versus 1,500 crores of revenue they did last year from exports specifically for Dixon. Now with the tariffs amongst other factors, it could be under pressure that the growth guidance could be impacted. For PG, as of now, we're not seeing any impact on someone like an EPAC or an Amber as well, because they came out and they mentioned that while Q2 will be soft, there could be recovery in the second half and specifically in Q4 because of the AC division of both these companies of Amber as well as EPAC. So there is where it lies, the pressure. Someone like a Sirma is up today because of the QIP getting launched, and Keynes as well with the semiconductor business amongst others doing well. We are seeing some kind of pressure on the AC business verticals and those who operate in that segment, and PG is definitely leading their baton.
Okay. Keep an eye out for some of these for sure. Thanks a lot for that, Puneet. Now, Kunal, I'm first to you and then to Neeraj. Kunal, is there a trade here into any of these?
Yeah, I think definitely for the entire space where we have seen the bigger correction, I don't think any trade over here at the current levels. Specifically, if I would like to highlight over here PGEL. I think here already there were signs of distribution at higher levels for the stock, and now the confirmation has kicked in. So probably we can see further downside over here. You can expect the stock to go towards the mark of at least 520 to 500 on the downside in the very short term. So still some more downside left for the stock. If anybody is holding long, I think even although the stock is down 18.5%, but I think even at this level, if you get an exit point, it would be a good time to exit the stock.
And I wonder if you believe, Neeraj, that these dips are opportunities to buy, or are the valuations still prohibitive for some of these?
Actually, the kind of growth that they were showing in the last few quarters was tremendous. So every quarter they used to beat the guidance and show very good growth. So this is the first quarter after so many quarters that we got this kind of a disappointment. So it's better to wait and see, and I think listen to the con call also. Let there be detailed discussion with the management, and then let's take a call, because definitely valuation wise, they were trading at 70, 80 times. Now they would have come close to 55, 60 times 1 year forward. So depending on what guidance management gives for a longer term, I think one can take a call at what price it will make sense to buy stock. I think for the time being, let's first hear the management, let's hear the con call, and then take a call on the stock. Let's not be in a hurry to jump into the stock, so it's fallen 20% today.
The view with regards to where PG Electroplast stands, a tad bit of recovery, down 19% still, tad bit of recovery from that 20% at least.
Well,
but
we thought Kalyan would be the stock of the day, but it turned out to be PG.
Exactly. But Kalyan also down 10%. So that's also quite significant. So broader markets most certainly under pressure for sure. But I think the one stock and the earning that we'll be focusing on today post-market hours is going to be Tata Motors for sure. Weak Q1 sales is something that we know of, but we have Puneet joining us with more details as to what can you expect from Tata Motors earnings.
Not so much good news either here, similar to PG, because we're expecting the profits to fall by 31% according to Bloomberg consensus, and it has to be taken with a pinch of salt, because for the first time for Tata Motors, there's a range between brokers like Novama who anticipate profits to fall 40%. It's roughly about 2,600 crores, all the way up to 4,000 to 4,500 crores is the anticipation from varied analysts, and that's just because how uncertain this quarter is for Tata Motors. In terms of revenue as well, it's expected to fall 6%. EBITDA will collapse by 31% as well, and that's largely because of the JLR business as well as the uncertainty of tariffs in the US in Q1. So we will see that impact at the start of the quarter. Tata Motors did mention that they won't be shipping any more cars, at least in the start of April, and that's what they did. Post that, resumptions happened, but that is expected to have a 400 basis point impact on margins. But very interestingly, over the last month or so, there have been two critical updates that will be one of the most watched out in this particular quarter. So rather than the numbers, the commentary will be focused on two key updates. One will be on the appointment of Mr. P.B. Balaji as the new CEO of Jaguar and Land Rover from November. He's the current CFO, been with the company since November 2017, and this could be one of the biggest moves, the first Indian CEO of course, but one of the biggest moves in terms of turnaround, because he's been with JLR and seen the financials over the last 8 years. And the second will be the Iveco deal. They've just completed announced that acquisition of 4.5 billion euros that will boost the commercial vehicle division. And while there were some concerns on the ROCE falling from 40 to 20%. Lately, there has been chatter that this could actually be positive because they have the engine business, and that's something that Tata Motors CV division outsources. So these two will be one of the key aspects to watch out for, but results largely expected weak for Q1 for Tata Motors.
Largely weak numbers is something that we can expect from Tata Motors. Kunal, any view on the charts quickly?
See, for Tata Motors, I think overall the view continues to be on the negative side. It is already on the larger term time frame. It has been trading in the lower top, low bottom formation. So we expect this move to continue on the downside. It could test the support zone of at least 595 to 560 on the downside.
Okay. And Neeraj, your view on Tata Motors and any particular counter that you like in the space?
Tata Motors specifically has been subdued. The expectation is not good as far as results are concerned. So I think it'll be interesting to see what kind of a number they deliver, because it is coming with a very low expectation. So even inline numbers may help in making a bottom for the stock. So I think once the numbers are out, you can then take a call. If the numbers are inline or slightly better, then that would be a time to maybe look at the stock again for investment. And in the automobile space, I think the two-wheeler space is one space where I'm positive on. Looking at the good monsoon, low inflation, low interest rates. So two-wheeler space is one space where I think there is opportunity, and going ahead, I think towards the festival season and second half of the year, I think they can do better.
Okay. All right. One more stock that is, seeing a significant amount of pressure today is Coforge. Now, it's let's try to pull that up. It's down by about 5.7, almost 6% as we speak, and this is on the back of Sabre. Now, that's its largest client reporting a weak set of numbers, and we have Jasmeet joining us to give us more context on that. Jasmeet, what are you picking up?
Well, right, yes, thank you for that. As we see, Coforge is under pressure. The stock is down almost 6% in trade today. This has come on the back of one of the largest clients of the company have reported the numbers overnight. While the stock is almost 35% down on the Nasdaq, and the management of Sabre has also reduced the guidance. So this creates uncertainty for the company. Now, when you look at the deal, the company had signed a multi-year deal back in the March, and the deal was worth $1.6 billion. While this deal is supposed to be executed over the 13-year span, which is a long-term deal, and when you look at the task for Coforge in between the deal would be to provide product delivery as well as the AI advanced resources. Now, when we speak to management, as for the management commentary in the Q1, the deal ramp up is already in process, and as of Q2, the deal would still ramp up, and Q3 will see a stabilization in terms of employee hiring and the revenue adding up to the top line. When you look at the revenue of the company as per Q1, the revenue is up 8%, while the margins saw slight pressure, and also the net profit is up 21%. As of now, there is no further news from the company. It's a wait and watch to see how this further impacts the company going forward.
Neeraj, views with regard to IT. Firstly, thank you so much, Jasmeet, for that. Neeraj, views with regard to IT and Coforge in particular?
I think IT, still, there is no clarity on, the kind of demand slowdown which may happen because of US. So I think there's still so much uncertainty there. So though my view is neutral now, I don't think there's any point selling your IT stocks now. If someone is holding, one should hold on to them. But to buy, maybe you need some sort of more clarity. But, one advantage that they'll get is because rupee has weakened as compared to the dollar. So that may be of advantage to some of these companies. So I would say that looking at that, maybe Infosys, TCS, they can be considered. Like Coforge anyway is expensive stock. So any uncertainty or any order losing of any order there or any slowdown can impact them harder than any of the other larger names. So, but if one has to take a investment call, maybe the larger one like TCS or Infosys can make sense at these levels, especially looking at the kind of currency movement that you've seen.
Okay, all right. So that's with regard to IT. Now, very interesting note that came out earlier today was with regard to HSBC, and they've really picked 5 sectors where growth has seen more headwinds than anything else. So it's basically that some of these sectors are reeling under some bit of pressure where growth is concerned, but companies specifically seem to be doing okay. One is Trent. Compelling story offered due to Zudio's store additions as well as growth, while it slowed down, and even the guidance seems to suggest 25%, is not as bad. It's extremely strong compared to the way in which peers are growing. Number 2 is an Infosys, outperformed peers in Q1 FY26 and incrementally, according to them, could continue to do better. Valuations no longer a concern. INR weakness, in fact, will likely support. GCPL is the third one. Again, earnings came out, stands out in terms of innovation capability, gaining market share in the home insecticides business. The fourth one is SBI, again earnings candidate today. Strong balance sheet liquidity, better placed versus large private banks, valuations also decent. Phoenix Mills is the last one. Should benefit as it undergoes and refreshes its legacy malls, and the stock offers attractive valuations after the correction. Neeraj, any of these on your radar?
I think consumer stocks can talk about Godrej consumer. If you're talking about Godrej consumer products.
Yes, please, Neeraj. GCPL.
I think consumer stocks can do well because, I feel that going ahead, that is what the expectation is, that demand should pick up closer to the festival season also. And we saw some volume growth also happening when they declared the results. So I think if volumes are good, margins can pick up if demand is strong and if inflation is low. So I'm positive on the consumer space there. I think that can be one space which can be defensive, plus can give a decent return towards the festival season.
Okay, just before we take the BTST call, just some flashes on your screen. Just need to keep that in mind. It's a withdrawal of the 2020 Income Tax Bill 2025. I think this was slated to replace the Income Tax Bill 1961 to simplify, etc. Presumably, there have been multiple versions, and I think that in order to avoid the confusion of that, there is some change that is happening. So just a cursory check out there. Okay, closing strategies. And Kunal, if you had to place a BTST or STBT as the case may be, what would you choose right now?
Yeah, I think I'll definitely go with an STBT because the mid-cap index has broken the swing low, and that is where we see further pain point in the broader markets. The mid-cap index will test the 200 DMA on the downside, which is placed at 12,300. So here my bet is on CAMS on the sell side. Already the stock had witnessed a sharp correction from the high levels. It witnessed a minor pullback and now it is ready to go for another down move. So CAMS is a sell, 3740 is where it is currently trading. One can keep a stop loss of 3820 and one can look for targets on the downside. First would be 3650 and second would be 3620.
Okay, all right. So those are the picks that Kunal has for the closing strategies, where the closing strategies are concerned. But you know what? Family businesses are the backbone of our economies, and they shape industries, create livelihoods, and pass down more than just wealth. Today, we premiere a very important series, Building Legacy, that is a candidate of series that peels back the curtain on family-run enterprises from the boardroom to the balance sheet. The series explores what it takes to not only build a business but pass it on with industry stalwarts like Ajay Sriram, Sunil Kant, Munjal, Anand Goenka, as well as Muthu Muragappa. Now, in our pilot episode, we explore strategies for introducing the next generation. Learn how successful families structure their businesses for longevity and navigate the sensitive topic of wealth division with we've got Janmejaya Sinha, who is the chairman at BCG India. Take a look at a snippet of that conversation.
some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
Family businesses are not just important in India. If you look across the world, in Europe, family businesses are dominant. Why have they not actually captured the attention in India in the same way? Because we were so poor when we were coming out of our poverty, everyone wanted to hide their wealth. But if you really look at it, about 320 out of our top 500 companies are family owned.
Yeah. Yeah. So this is the thing. Family businesses, and if you speak to companies that are family owned, they will be very quick to say that yes, we are family owned, but we are professionally run. Is there a clear distinction between the two?
See, the term professionalization has often been misconstrued to say that the family will exit from the business and professionals will run it. But the entrepreneurial spirit, who took the risk, who bet the capital? That's an important question. Not who is managing it, but who actually risked it. And those were normally family businesses. Some Superman entrepreneur at some point started the business and grew it against the odds.
Okay, before we wrap up, a quick 30 seconds from both our guests. So, Neeraj, to you first. Okay, Neeraj we'll get to Neeraj in a moment. Kunal, I heard you say that because the mid-cap index has broken down, you'll obviously take a STBT and not a BTST. But at the lower levels, are there pockets that you would look to keep on your radar for buying? What are those?
Yeah, I think, definitely. If you look at this, I think one is the power space. I think that looks attractive. I have a key interest and eye on it. So your stocks like NTPC, Power Grid, these are some of the stocks that are there on my radar. That will be a buy opportunity. Even from the energy space, I think one counter which looks attractive to me is GSW Energy. I think overall the stock has consolidated in this weak market, and once the dust settles down, we will expect a sharp move on the upside. So these are some of the counters which are there in my radar. Once the dust settles down, these will be the counters which will start to outperform.
Okay, Kunal, thank you so much for taking out that time and giving us all those insights, and have a great weekend. Thank you so much, Neeraj, as well. We're nearing market close for this week for sure. Let's try to pull that up and see how markets are going to end this week. We'll also try to pull up the weekly charts for both Nifty as well as the Bank Nifty and broader markets as well, of course. Nifty 50 down by about 1% at the day's low point. This is the weekly chart, of course. Nifty ending with cuts of about 1.5%. Let's also try to pull up the Bank Nifty. Bank Nifty also trading lower in terms of the overall week, closing around 1.6% lower. The broader markets, let's try to pull that up. In terms of the mid-cap 150 and the small-cap 250, mid-cap 150 will be closing around 2.6% lower, largely led by today's move as well. The small-cap 250 as well, closing around 3.7% lower, right now trading around 1.5% lower. So again here, big moves coming in today, probably affecting the overall week's moves as well. Let's also try to pull up the Nifty heat map and see how shares are now closing by the end of the day. IndusInd, the top loser, down by about 3.3%, followed by Bharti Enterprises, Shriram Finance, Tata Motors, M&M, Grasim on the back of its earnings, Hindalco as well as Kotak Mahindra Bank, Nestle, RIL, Axis Bank, all down by about 1 to 1.5%. There's NTPC, which is the top gainer. closing on 1.6% higher. Titan, another count on the back of earnings, closing 1.4% higher, and Dr. Reddy is also seeing gains of about 1%. But let's try to pull up the advanced decline ratio, because that's going to be interesting, because last 1 hour has seen significant amount of moves in the broader markets, and there you go, it's widened. 1600 odd declines versus that of 600 odd advances. So almost nearing that 3:1 ratio, just shy of that ratio. In terms of where the sectoral heat map is concerned, let's try to pull that up. Probably all sectors in red, and yes, red across the board there. Defense closing 2.5% lower. In fact, after this, we'll also try to pull up as to how defense has done the entire week if we can. Nifty Realty down by about 2.3%. Nifty Metal also seeing cuts of over 1.8%. Nifty Auto down 1.5%. Private banks also seeing pressure, down by about 1.3%. Pharma also down by about 1.3%. Nifty FMCG down by about 0.7% there, and there is Nifty IT also, which is down by about 1%. So pressure continues across sectors. Let's also try to pull up the BSE 500 and try to see how stocks have done today. KRBL, the top gainer there, closing about 15% higher almost there. GSFC, Global Health, Kalpataru Projects, GIC, all on the back of earnings doing well. But serious pressure in Kalyan Jewellers, down by about 10%. There's also PG Electroplast that we cannot forget, down by about almost 19%. Varroc Engineering, KIOCL, La Opala, Ramco, as well as GSL, all seeing cuts of about 8.5 to 6%. So this is with regards to where markets are concerned. Let's also try to pull up what to watch out for this weekend. Some earnings as well as some corporate action that we'll be able to see. We'll try to pull that up in a while. But we have Shreyansi joining us for a special segment where she'll come and tell us as to what you're supposed to do this weekend.
Well, absolutely, and the list is quite long. Let's take a look at this week's list then of Popcorn Pearls. The first one that you have is Andaz 2, yet another sequel making it to this list, but we'll talk about it in a bit. The second one is, of course, Weapons. It's a Freaky Friday, and we'll tell you about this one. But first, let's take a closer look at Andaz 2, because this is another sequel where you do have Sunil Darshan, who's back after 20 years, and he's making a comeback with this particular sequel. It's a remake of a 2003 Akshay Kumar film, and it's made with a budget of 30 crore thereabouts. So keep an eye on this one. The reviews are not that great, but let's see if the Sayara fever really rubs off. In fact, on this one, that's also got newcomers. Next one then is Weapons, because as I mentioned, it is a Freaky Friday, and you do have Zach Kreger coming back with this one after Barbarian, and this one of course is bigger, it's more ambitious. It's starrier as well, made with a budget of about $38 million. So that is one that you're looking at, and this is also made from the same studio that was behind Conjuring and It. So keep an eye on this one. But of course, it's Sayara that we've got to talk about yet again. It's Bollywood's guiding star at this point in time, crossed 500 crore rupees in collections, which is almost unheard of for a movie with just newcomers. It's managed to be the second highest grossing film after Chhawa, which managed to rake in about 800 crores thereabout. Let's look at the next one as well, which is the list of OTT releases that you should be watching out for. The first one on this list is Salakar, which is set across 2 timelines. It's releasing on Jio Hotstar. It's got Naveen Kasturia, Moni Roy, as well as Mukesh Rishi. So keep an eye on this one, and this one is for the Money Heist fans. It's got probably the most daring diamond heists, and that is something that Netflix is covering with this one. So keep an eye on this one as well. But with that, we're completely out of time. Thank you so much for tuning in.
force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors, market regulator, securities and exchange.
Hello and welcome. You're watching Market Express and I'm your host Malika Mishra. This is a show where you get all your market related updates as well as national and international news, top stories and in the most fast and efficient manner. Let's dive straight in. Markets end at the day's low. Nifty ends below 24,400. Sensex was down almost 800 points. Bharti Airtel and HDFC Bank dragged the most. NTPC and Titan were the top contributors to the index. All sectors end in the red. Nifty, Defence and Realty dragged the most. 43 out of the 50 Nifty 50 stocks companies declined in the trade today. State Bank of India's Q1 FY26 results shined with net profit beating estimates driven by a 55% year-on-year surge in other income from treasury and forex gains. Net interest income met expectations but grew less than 1% quarter-on-quarter, reflecting deposit cost pressures. Operating profit exceeded forecasts by 11%, supported by robust non-interest income. Provisions aligned with estimates, while asset quality improved with gross NPAs at 2.07%. Life Insurance Corporation of India delivered a stellar Q1 FY26 with a 5% rise in net profit to 10,986 crore rupees and a 20.75% surge in value of new businesses to 1,944 crore rupees, beating estimates. The non-par product share in individual APE jumped to 30.34% from 23.94%, boosting VNB margins by 150 basis points to 15.4%. The expense ratio dropped to 10.47% from 11.87% earlier, and the management expects stronger growth in the second half of FY26. KRBL, India's top basmati rice exporter, delivered a stellar Q1 FY26 with net profit surging 74% to 151 crore rupees, fueled by a 98% jump in export revenue. Revenue rose 32% to 1,584 crore rupees, while EBITDA climbed 64.4% to 193 crore rupees, boosting margins to 12.2% from 9.8% due to lower basmati costs. Domestic sales grew 15% with a 200 basis point market share gain in Maharashtra as inventory and working capital days dropped significantly. Godrej Consumer Products reported a 10% year-on-year revenue rise in Q1 of FY26, driven by 5% volume growth in household insecticides, but EBITDA fell 4% to 695 crore, with margins contracting to 19% from 22% due to high cost inventory, price cuts in soaps, and competitive pressures in Indonesia. Net profit grew marginally by 0.4%. International revenue and EBITDA declined on flat volumes, and GCPL maintains guidance for mid to high single-digit India volume growth and double-digit EBITDA growth in the second half, expecting margin recovery. Jefferies maintained buy rating on Godrej, raising its target to 1,450 rupees, citing strong household insecticides and Africa growth despite soap declines. Morgan Stanley's overweight at 1,431 noted a margin miss but positive market share gains. Macquarie's neutral at 1,200 rupees flagged ongoing price competition in Indonesia and weak soap sales. Margins fell to 19% due to high cost inventory and competitive pressures. Cummins India delivered an exceptional Q1 FY26 with standalone net profit soaring 40% on a year-on-year basis, surpassing the 478 crore estimate. Revenue rose 27%, beating the 2,652 crore forecast, driven by 25% domestic sales growth and 34% export growth on a low base. EBITDA jumped 33% with margins expanding 116 basis points against expectations of contraction. Profitability was boosted by 44 crore rupees in exceptional gains, lower finance costs, and higher other income. The company remains cautiously optimistic about sustained momentum. Ramratna Wires announced a 15 crore investment to expand into bulk molding compound production, targeting the automotive, electrical, and construction sectors. This strategic move aims to capitalize on growing demand for lightweight, high-performance materials, complementing its existing portfolio of enameled copper wires and copper tubes. The expansion, approved by the board, aligns with the government's incentives like PLI and RIPS, boosting import substitution. Production is expected to commence by the third quarter of this financial year at its Bhiwadi, Rajasthan facility. Metropolis Healthcare posted a strong Q1 FY26 with consolidated net profit rising 19% on an annual basis to 45 crore rupees, exceeding the 42 crore rupee estimate. Revenue grew 23% to 386 crore, matching the 385 crore forecast, driven by 11% patient volume growth and 12% test volume growth. EBITDA increased 14%, beating the 85 crore estimate, though margins fell to 23% due to higher reagent costs. Now, B2C revenues grew 19%, B2B 29%, with specialty diagnostics and True Health leading. Zydus Life Sciences received its first notice of compliance from Health Canada for ZDS Varenicline tablets, a smoking cessation aid, marking its entry into Canada's prescription drug market. Now, Varenicline, a partial nicotinic acetoreceptor agonist, reduces nicotine cravings and withdrawal symptoms. The tablets to be manufactured at Zydus' facility in Ahmedabad targets a 15 million market. Now, this follows Zydus' 2023 US FDA approval for Varenicline. PTC India reported a 44% YOY surge in Q1 FY26 consolidated net profit to 195 crore rupees, beating estimates of 180 crore, driven by lower expenses and an 8% rise in trading income to 78 crore rupees. Revenue fell 12% to 4,009 crore rupees due to lower power tariffs. EBITDA grew 18% with margins expanding to 7%. Trading volume rose 13% with core margins at 3.37 paise per unit. Biocon reported a challenging first quarter FY26 with consolidated net profit dropping 95% YOY to 31 crore rupees, missing the 50 crore estimate due to higher other income in the base quarter. Revenue rose 15% to 3,942 crore in line with expectations, driven by Biocon Biologics and Generics. EBITDA grew 21% with margins improving to 19% from 18%. Biocon raised 4,500 crore via QIP to increase its biologics stake and exit PE investors. Sai Life Sciences posted a stellar Q1 FY26, swinging to a net profit of 60.5 crore rupees from a 13.5 crore rupee loss last year, driven by a low base. Revenue soared 77.5% to 496 crore rupees, with EBITDA jumping to 121 crore rupees, boosting margins to 24.4% from 9.3% due to operating leverage and lower employee costs. Lower interest costs further fueled profits, with shares up 2% today, reflecting optimism in Sai's CDMO growth and new peptide research center. Gujarat State Fertilizers and Chemicals posted a robust Q1 FY26 with net profit soaring 58.7% to 139 crore rupees from 87.3 crore rupees year-on-year. Revenue edged up 1% to 2,184 crore rupees, while EBITDA jumped 75.5% to 193 crore rupees, boosting margins to 8.8% from 5.1%, driven by improved P&K fertilizer realizations and strong ammonia sales. Despite 73% drop in urea sales due to trial exclusions, industrial products remained profitable, though lower spreads hit volumes. Data Patterns Q1 FY26 results disappointed, with net profit dropping 22% to 25.5 crore rupees from 32.8 crore rupees year-on-year, missing estimates of 37.2 crore rupees. Revenue fell 4.6% to 99.3 crore rupees, hit by delays in customer approvals, while EBITDA declined 13.7% to 32.1 crore rupees, with margins shrinking to 32.3% from 35.7% earlier. Garden Reach Shipbuilders and Engineers delivered a robust first quarter of FY26 with net profit soaring 37.8% to 120 crore rupees from 87.2 crore rupees on a year-on-year basis, beating estimates. Revenue jumped 29.7% to 1,310 crore rupees, driven by advanced execution of P-17A frigates. EBITDA nearly doubled, up 98.9% to 112 crore rupees, with margins expanding 8.5% from 5.6% earlier. Star Cement delivered a stellar Q1 FY26 with net profit soaring to 98.5 crore rupees from 31 crore rupees year-on-year, beating estimates. Revenue surged 21.4% to 912 crore rupees, driven by strong demand in Northeast India. EBITDA nearly doubled to 228 crore rupees, boosting margins to 25% from 15.5%. AU Small Finance Bank has received RBI's in-principle approval to become a universal bank, the first such NOD since Bandhan Bank in 2014. The bank, which applied in July 2024, met stringent criteria including 5 years of strong performance and maintaining gross NPAs below 3% and net NPAs below 1% for 2 years. This milestone, post its Q1 of FY26 net profit of 581 crore rupees, allows AU to expand into larger loans and corporate banking. Coforge's stock plunged 5% today, down 17% over the past month after its key client Sabric Corporation reported disappointing Q2 results and slashed its FY25 guidance. Sabric, contributing significantly to Coforge's revenue, posted a 30% stock drop in the US after missing revenue and EBITDA targets, raising fears about the $1.56 billion 13-year deal signed in March for AI-driven product delivery. Investors worry Sabric's financial woes could delay execution and impact Coforge's near-term revenue despite its robust $1.55 billion order book. PG Electroplast trims FY26 outlook sharply. Revenue growth now seen at 17 to 19% versus 30% earlier. Product and electronic segments face steep downgrades. Net profit guidance slashed to 300 rupees to 310 crore, 300 to 310 crore rupees from 405 crore rupees earlier. And major US retailers including Walmart, Amazon, Target and Gap have asked Indian textile and apparel exporters to hold shipments after Donald Trump doubled tariffs on these products. Exporters say higher duties could push up costs by 30 to 35% with buyers unwilling to share the burden. The steep tariffs could cut US-bound orders by up to half, causing losses of up to $5 billion. Exporters fear losing business to Bangladesh and Vietnam, which face lower duties. Cabinet approves the revised income tax bill. The government has withdrawn the Income Tax Bill 2025, which was introduced in the Lok Sabha in February to replace the 1961 law. A revised version reflecting most recommendations of the Select Committee led by Baijayanth Pandey will be tabled on Monday, August 11th. The move is aimed at avoiding confusion from multiple drafts and ensuring the House considers a single and updated version. And OpenAI sees India as its fastest growing market and is set to bring more of its products here while keeping them affordable. CEO of the company, Sam Altman, says the demand for software is rising and artificial intelligence will help meet it, not take jobs. He also unveiled GPT-5, a more reliable, multilingual model that understands over a dozen Indian languages. Zepto has entered the online pharmacy space with the launch of Zepto Pharmacy, promising to deliver medicines in just 10 minutes. The service is now available in parts of Mumbai, Bengaluru, Delhi NCR, and Hyderabad after a year-long pilot to fine-tune operations. Co-founder Adit Palicha says the focus will be on maintaining high operational standards rather than rapid expansion. The move puts Zepto in direct competition with Tata 1mg, PharmEasy, Apollo 24/7 and other quick commerce players in the medicine delivery space. Rolls-Royce is looking to set up a maintenance, repair and overhaul facility in India for the AE 2100 engine used by the Indian Air Force. The move comes as the India-UK Free Trade Pact takes effect. The aerospace giant says the plan will help support and sustain the Air Force fleet and strengthen its defense ties with India. And rescue and relief efforts are intensifying in Uttarakhand's Uttarkashi district following flash floods in the Darhali and Harsal regions. State authorities have reported that 566 people have been successfully evacuated so far, with efforts underway to rescue nearly 300 more stranded individuals. The Indian Army is leading the search operations, deploying specialized equipment including dog squads, drones and ground-penetrating radar. To oversee the massive operation, Director General of Police Deepam Seth visited Uttarkashi to assess the ongoing rescue and relief measures. Brazilian President and Prime Minister Narendra Modi have agreed to work on expanding the Mercosur-India trade agreement. In a phone call, they set a target to push bilateral trade beyond $20 billion by 2030. Both leaders discussed the global economic situation, opposed unilateral tariffs and by the US, and also stressed the need to defend multilateralism. Now, Lula will visit India in early 2026, with Brazil's Vice President arriving in October to prepare for the trip. In a sharp reaction, the Election Commission of India has hit back at Congress leader Rahul Gandhi. The poll body criticized his recent presentation on alleged voter fraud, calling his analysis absurd. The commission has challenged Rahul Gandhi to either file a formal complaint under oath or issue an apology to the nation for what it calls misleading interpretations. Sources from the Election Commission stated that if Gandhi stands by his allegations, he should have no problem signing a declaration. If he fails to do so, it would prove that he himself does not believe in his own analysis. A large-scale anti-terrorist operation is underway in Jammu and Kashmir's Kulgam district, and it has now entered its 8th day. This has become one of the longest security operations in the region in recent memory. Hundreds of troops, including special forces, are engaged in a fierce gun battle with terrorists who are believed to be well-trained in jungle warfare and are deeply entrenched in a dense forest. Security forces are treading carefully, utilizing drones and attack helicopters to neutralize the hiding militants. US President Donald Trump has ruled out trade negotiations with India until the ongoing tariff dispute is resolved. His decision follows the US doubling tariffs on Indian imports to 50%, citing national security concerns linked to India's oil purchases from Russia. When asked whether he expected talks to resume, Trump responded, "No, not until we get it resolved." President Donald Trump is demanding that Intel CEO resign immediately, calling him highly conflicted over his investments in Chinese firms. Lawmakers, including Senator Tom Cotton, have raised national security concerns about Tan's ties. In response, Tan said Intel is actively engaging with the US administration to clarify the facts. Israel's security cabinet has approved a plan to take over Gaza City. Prime Minister Benjamin Netanyahu's office confirmed the move, aiming to defeat Hamas. The plan includes disarming Hamas and freeing hostages. This move may displace 1 million Palestinians. The UN warns of catastrophic consequences. Israel's military chief opposed the plan, citing risks to hostages. And that's a wrap on Market Express, but do stay tuned to NDTV Profit as we have Profit 360 lined up for you right on the other side.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio.
The Nifty declines for the 6th week in a row. Broader markets extend losses for the 3rd straight week. All sectoral indices also close lower. SBI ends flat after net interest income and provisioning come in line with estimates. Operating profit beats expectations. Other income lifts profitability. The Cabinet approves a revised income tax bill and formally withdraws the previous version introduced back in February. Sources say it will incorporate recommendations from the Select Committee and introduce it in the Parliament on the 11th of August. Godrej Industries, Nadir Godrej expects AI to lead job cuts even in the FMCG sector, hinting at fewer opportunities, says that the Godrej won't hire and fire. Bajaj Auto expects rare earth export curbs to have a 40 to 50% impact of its EV production in the 2nd quarter, highlights intense competition in the lower end segment of EVs. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Over the next half an hour, I'm going to bring you the latest in markets as well as national and international news. So let's take a look at how the markets fared today. Benchmark indices gave up previous session's gains to close 1% lower today. The markets were dragged down by tariff-related concerns and foreign fund outflows. Now, the Sensex fell over 780 points while the Nifty dropped to 24,360, down more than 230 points. All sectors closed in the red, with realty, pharma and auto down almost 2%. But for a more detailed roundup, let me go to my colleague Harsh, who's going to join us with all of the details. Harsh, over to you.
Well, we closed a Friday where the Nifty was down 1% in trade. So the benchmarks clearly reeled under pressure and the move yesterday was quickly reversed. At the start of trade today itself, we sustained for a very long period in a very, very range-bound fashion, and thereafter we closed nearly 1% lower. So pressure evident even within the advanced decline, just 9 advances within the Nifty 50. Now, it's the 6th straight week when the Nifty has closed in the red. So markets clearly moving in that direction and pressure is evident. When you're looking at the Bank Nifty as well, that too was pressured in trade today. In fact, all sectoral indices were in the red.
We cut across to the press conference by the Cabinet at this point of time.
परिवारों को कैसे हम इंसुलेट करके रखें, उनके ऊपर कोई नेगेटिव इम्पैक्ट ना पड़े, ये सोच के ये फैसला लिया गया। 30,000 करोड़ रुपीस अप्रूव किए हैं, जो कि सीधा मिडिल क्लास परिवारों के जेब से बचेंगे, जो कि उनके परिवारों में एक खुशी दौड़ेगी। तीसरा बड़ा फैसला लिया गया कि राज्य सरकारों के जो टेक्निकल एजुकेशन के इंस्टीट्यूशंस हैं, उनको सपोर्ट करना, उसमें ट्रांसफॉर्मेशन लाना, उसके लिए 4,200 करोड़ रुपए का एक प्रोग्राम सैंक्शन हुआ है। हम सब जानते हैं IIT IIM का एक सिस्टम है, बहुत एक उसका एक लेवल विश्व भर में जाना माना जाता है। NITs का सिस्टम है, दुनिया भर में उसको माना जाता है, मान्यता प्राप्त है। जो राज्य सरकारों के टेक्निकल इंस्टीट्यूशंस हैं, उनमें गुणवत्ता कैसे आए, क्वालिटी कैसे आए, कैसे इम्प्रूवमेंट आए, तो 175 इंजीनियरिंग इंस्टीट्यूशंस एंड 100 पॉलिटेक्निक्स देश भर में, जिसमें करीब 7.5 लाख स्टूडेंट्स एंड 13,000 फैकल्टी मेंबर्स को बेनिफिट मिलेगा, उसके लिए ये प्रोग्राम बनाया है। 5 पिलर्स हैं इस प्रोग्राम के। सबसे पहला होगा अपग्रेडेशन ऑफ द क्लासरूम्स, लेबोरेटरीज, इंफ्रास्ट्रक्चर, और जिससे कि उनका ओवरऑल क्वालिटी में इम्प्रूवमेंट आए। दूसरा, इंटर्नशिप और प्लेसमेंट सर्विसेज में बहुत फोकस किया है इसमें। कैसे, जैसे IIT सिस्टम है, तो IIT सिस्टम में प्लेसमेंट का एक अपने आप में एक मैकेनिज्म बना हुआ है, जिससे कि इंडस्ट्री आती है, इंडस्ट्री के साथ एक कोलैबोरेटिव वे में एक डिस्कशन रहता है। वैसा ही सिस्टम स्टेट के इंस्टीट्यूशंस में बने, वो यहाँ पे इंट्रोड्यूस किया जाएगा। तीसरा, इंक्यूबेशन सेंटर्स, जो कि जैसे IIT मद्रास का हम सब ने देखा, बहुत ही अच्छा इंक्यूबेशन सेंटर है। IIT दिल्ली में भी बहुत अच्छा है। वैसे ही इनोवेशन के हब्स को हम स्टेट गवर्नमेंट के इंस्टीट्यूशंस में कैसे डेवलप करें, वो इस प्रोग्राम का एक बड़ा हिस्सा रहेगा। वो इनोवेशन का एक बड़ा हिस्सा रहेगा। फिर गवर्नेंस कैसे सुधार हो, जैसे बोर्ड ऑफ गवर्नेंस का सिस्टम है आईआईटीज में। आईआईटी का प्रैक्टिकली सारे 99.9% फैसले बोर्ड ऑफ गवर्नर्स के लेवल पे होते हैं। तो राज्य सरकारों में भी कैसे डिपार्टमेंट ऑफ हायर एजुकेशन और डिपार्टमेंट ऑफ टेक्निकल एजुकेशन से बाहर आकर एक ऑटोनोमस वे में एजुकेशनल इंस्टीट्यूशंस में डिसीजन मेकिंग हो पाए, वैसे गवर्नेंस के मैकेनिज्म्स। फिर फिफ्थ, जो ग्लोबल बेस्ट प्रैक्टिसेस है, उनमें से बहुत सारी प्रैक्टिसेस, बेस्ट प्रैक्टिसेस आईआईटीज में, एनआईटीज में, उनको कैसे हम स्टेट गवर्नमेंट के इंस्टीट्यूशंस में लाएं। ये फंडिंग जो होगी वो परफॉर्मेंस लिंक्ड फंडिंग होगी, और जो अचीवमेंट आएगा उसके बेसिस पे इंस्टीट्यूशंस को और फंड्स दिए जाएंगे। काफ़ी ऑब्जेक्टिव वे में इसका एवेल्युएशन किया जाएगा, डेटा ड्रिवन गवर्नेंस रहेगी। चौथा आज का फैसला है साथियों, नॉर्थ ईस्ट का। आप सब जानते हैं कि 11 वर्षों पहले नॉर्थ ईस्ट में एक के बाद एक डिस्प्यूट्स, वायलेंस, एजिटेशंस, एक सीरीज ऑफ एजिटेशंस चलता रहता था। नॉर्थ ईस्ट में इन्वेस्टमेंट कैसे जाएगा, शांति रहे, लॉ एंड ऑर्डर मेंटेन हो, बड़ा एक चैलेंज था। इन 11 वर्षों में प्रधानमंत्री श्री नरेंद्र मोदी जी के नेतृत्व में नॉर्थ ईस्ट में एक के बाद एक डायलॉग के थ्रू, आपस में बैठ के बातचीत के थ्रू, बैठ के समस्या को समाधान करने की भावना के साथ जो डिस्कशंस हुए, उसके थ्रू सीरीज ऑफ मेमोरेंडम ऑफ सेटलमेंट हुए, और उसके कारण कई ऐसे ग्रुप्स जो कि मेन स्ट्रीम से बाहर थे, एजिटेशन का रास्ता उठाए हुए थे, वायलेंस में लिप्त थे, वो सब एक नॉर्मल मेन स्ट्रीम में आए। कई सारे एग्जाम्पल्स हैं। उन सब के कारण करीब करीब 10,000 कैडर्स ने सरेंडर करके मेन स्ट्रीम में जुड़े इन 11 वर्षों में। यूपीए के टाइम में 500, 550, 600 करोड़ का कुछ ओवरऑल वहां पे ग्रांट ज्यादा था, न उसका इम्प्लीमेंटेशन होता था ढंग से, केवल एक खाना पूर्ति जैसा था। एनडीए में इन 11 वर्षों में मेमोरेंडम होना, बातचीत, और एकदम रियलिस्टिक प्रैक्टिकल तरीके से बातचीत, फिर उनके लिए स्पेशल पैकेज बनना, उस पैकेज का इम्प्लीमेंटेशन होना, और इम्प्लीमेंटेशन के बाद में उसका फॉलोअप, रिजल्ट मेन स्ट्रीम में इंटीग्रेट करना, और उनकी सोसाइटी के हर आयाम को और उनके जो विशेष रिक्वायरमेंट्स हैं उनको ध्यान में रखते हुए ये सारे प्रोग्राम्स बने। तो अभी रिसेंट टाइम्स में 4 और नए मेमोरेंडम ऑफ सेटलमेंट हुए हैं असम और त्रिपुरा में। उन चारों के लिए स्पेशल डेवलपमेंट पैकेज बनाए, वो आज कैबिनेट में अप्रूव हुआ। इसमें टोटल 7,250 करोड़ रुपीस का ये पैकेज है, जिसमें से 4,250 करोड़ रुपीस सेंट्रल गवर्नमेंट से आएंगे और 3,000 करोड़ रुपीस स्टेट गवर्नमेंट के। इस 4,250 करोड़ रुपीस में बेसिकली ये जो 4 कंपोनेंट्स हैं वो आपके सामने हैं। सबसे पहला आसाम में है, आदिवासी ग्रुप्स ऑफ आसाम के साथ। फिर दूसरा है आसाम में ही दिमासा नेशनल लिबरेशन आर्मी और दिमासा पीपल सुप्रीम काउंसिल के बारे में के साथ। तीसरा अगेन यूनाइटेड लिबरेशन फ्रंट ऑफ आसाम के साथ, उनके कुछ ग्रुप्स थे उनके साथ। और चौथा ऑल त्रिपुरा टाइगर फोर्स और नेशनल लिबरेशन फ्रंट ऑफ त्रिपुरा। इन चारों के साथ जो डिस्कशन होके जो मेमोरेंडम ऑफ सेटलमेंट बना, उसके हिसाब से ये प्रपोजल्स अप्रूव हुए। और ये प्रपोजल, इसमें कई तरह के काम लिए जाएंगे। कनेक्टिविटी के काम होंगे, एजुकेशन के काम होंगे, हेल्थ केयर से रिलेटेड काम होंगे, स्पोर्ट्स और जो इंडिजिनस मेडिसिन है, इंडिजिनस स्पोर्ट्स हैं, उन सब का ध्यान दिया जाएगा। और विशेषकर जो कल्चरल
Right, there you heard it, Ashwini Vaishnav at the cabinet briefing saying that the cabinet has in fact approved a substantial fund. We're talking 30,000 crore to compensate India's state-run oil marketing companies for losses that were incurred on the sale of domestic liquefied petroleum gas. Let me quickly bring in Yogesh Patil of Dollard Capital joining me on the phone line. Yogesh, take us through, your sense or your perspective on this move, obviously responding to a pretty industry-wide cumulative under-recoveries between April to December 2024.
Yeah, first of all, good afternoon. And this is a positive news overall for the oil marketing companies. This decision was pending since announcement of ₹2 per litre excise duty hike in the first week of April. Our Honorable Minister, Oil Minister, that time communicated that the excise duty hike will be utilized for the compensation of domestic LPG cylinder losses. And last year, to our understanding, OMCs have incurred closer to 40,000 crore total under recoveries on the domestic LPG cylinder. Considering the market share of HPCL, BPCL, IOCL, they are in the range of 27% and 46% respectively. They have taken up much of the burden in FY25. Now the government has decided to pay them a 30,000 crore amount of LPG under recovery. That would be a compensation. This indicates the 75% of the total under recovery they will receive as a compensation. And this is a completely positive development for all these OMCs, HP, BP, IOC. And this amount will help them to reduce the debt burden. So net debt will definitely come down of the oil marketing companies, and it will definitely improve the equity value. So to our understanding, equity values of these HPCL, BPCL and IOCL will improve by 29 rupees per share in case of HPCL, BPCL 14 rupees per share, and in case of IOCL it will be a 7 rupees per share kind of a positive impact. To give you a precise number, HPCL will benefit 7% in terms of their equity value improvement. BPCL would be in the range of 4 to 5% and IOCL closer to 5%.
Right, Yogesh, do you expect this move to fully contain the potential LPG price hikes for Indian consumers over the next 1 to 2 years, or do you think that there is a potential for global price shocks to still necessitate further government interventions like this?
To my limited understanding, after reading the flash on the screens, I believe this is a one-time kind of a compensation. Now looking into the upcoming or forward propane or LPG prices, global LPG prices, they are on the downward trajectory. So it is unlikely that the government will come again and give another or next support to the oil marketing companies, because just sitting in the month of August only, from the next month, September 2025, we expect the LPG under recoveries will be below 50 rupees per cylinder, which were exactly more than 150 rupees per cylinder in the first quarter of FY26. So the kind of a reduction you can see, and that generally hardly requires any kind of a government support or compensation. So, yeah.
Right, Yogesh Patil of Dollard Capital, thank you so much for putting that in perspective. Remember, this is the update that's coming in right now. The Union Cabinet approving a substantial fund that's estimated at 30,000 crore to compensate India's state-run oil marketing on LPG, those companies. This move responds to, like we have been saying, industry-wide cumulative under-recoveries of about 30,000 crore. We're talking between April to December 2024, which has been a direct result of elevated international LPG prices and the government's policy of keeping retail LPG rates affordable for households despite global volatility. And let's now dive into our earnings coverage. First up is the State Bank of India's strong operating performance and loan growth that rose the bank's standalone net profit by 13%. However, increase in provisions and tepid profitability capped the lender's overall gains. But let's go across to my colleague Harsh for a detailed analysis.
Well, SBI posted an inline set overall. In fact, the beat on the profitability was led by other income. Other income grew 55% on a YOY basis at 17,000 crore odd. So it was a very, very strong number that SBI posted on the other income front. The net interest income was largely in line. The margin came down by around 10 basis points on a sequential basis. So from 3%, it's come down to 2.9% now. So you continue to see margin compression on an SBI. Now the question is, for how long does it go on for? With regard to operating profit, that was a beat because of other income. OPEX was largely steady, single-digit growth on a YOY basis, and you saw therefore operating profit came in much better than estimates, around 11% beat on the operating profit front. It came in at around 30,000 crore odd versus the 27,000 crore number that was penciled in by the street. You're also seeing provisioning absolutely in line at 4,500 crore. Slippages were contained, and largely agri and seasonality hits SBI in Q1 of every FY, and therefore you saw that come in as well. So normalized levels on those counts, and therefore your profit after tax was above only because of the other income. That was what led the beat with regard to earnings. So overall, that's how it panned out. Your NPA ratios were absolutely flat, 12% growth on both advances and deposits. Advances growth of sub 1% on a sequential basis. Deposit growth was decent versus what was penciled in. That's broadly the take. 1.14% on the ROA count as well versus the 0.97% that the consensus was working with.
Right, Harsh, thanks so much for that. Meanwhile, C.S. Sethi, the chairman of SBI, expects the corporate loan book to grow by 10% in the next 2 quarters. He gave this outlook during the post-results press conference. Let's listen in.
When we look at our pipeline and also the disbursement pattern which we are expecting, that gives us confidence. Around 10% is something what we should be reaching the corporate book. Asset quality is holding up well. And if you see, all segments of our retail personal loan, we maintained the stellar asset quality. And I believe that auto may not really be picking up because at least in Q2, going forward, maybe during festival season, auto sales, if they pick up, the auto loan segment also will pick up. Otherwise, home loan, we will continue to have a robust growth rates. And we are seeing both in terms of application sourcing and sanctions is robust there across the geographies. Unsecured personal loan, what we call express credit, is something what we want to grow, and I think the festival demand will make it, get into growth mode.
Meanwhile, LIC gained almost 3% after first quarter results beat estimates on all fronts. CEO and MD Doraiswamy expects the second half of the year to be better and said that the increasing trend in sales will help growth. Let's listen in.
Second half, naturally, growth has to be better because of the low base last year. We had gone into degrowth from October last year, so we expect that the trend that we maintain and the increased focus that we are giving on number of sales will certainly look at enhancing the growth in number of sales in the second half. That is something which we expect to happen. We are also bringing in a lot of new products which are also we are trying to bring in to see that every aspiration of the customer is met. So some innovation in products also is something which will be helping us in showing the improvement in numbers. Looking at improving quarter on quarter, whatever has been, what we have already achieved is something which will be a benchmark for us to exceed. So we are certainly looking at a VNB margin for the year which will be slightly more than what it was in the last year for the full year.
Now, meanwhile, shares of AU Small Finance Bank were in focus today as the stock opened 7.5% higher. The uptick comes on the back of RBI's approval to grant the bank a universal banking license. This is the first universal bank clearance since Bandhan Bank got its RBI preliminary nod in April 2014. So for consumers, this now means that the bank can offer a wide range of financial services and products under one roof without the restrictions, unlike a small finance bank. My colleague Vishwanath spoke to Sanjay Agarwal, MD and CEO of AU Small Finance Bank, and he said that the RBI's nod actually puts it on the top of the league. Let's listen in.
In terms of the business model, now you've said earlier that for the next 3 to 5 years you're going to continue doing what you're doing, and then maybe look at other, the previous lot of bank licenses that went out. Some of the lenders took some decisions which did not pan out very well. How are you seeing that journey of transitioning to the universal bank and your business model?
I think not much will be done. If you ask me, we are a scheduled commercial bank. We are 100% compliant with all regulatory requirement. I think this license will do a couple of things for us. One, I think the momentum will be in our favor because I have seen much curiosity from last night that who is AU, what is AU, what they do, whether now they are a full-fledged bank. I think the customer attraction towards us will go up. That eventually will help us to reduce our cost of money, can have more opportunity around our asset build-up. So that will happen, in my opinion, very quickly, And second, I think over the period, when I am with this status of universal bank, with this kind of legacy of maybe around 30 years, people will react very differently with us. As of now, we have to struggle a lot in terms of explaining us. So I think that will ease up a lot of things internally. We are moving towards Mumbai, So Mumbai is the heart of the whole banking as such, right? So we'll be operating more from Mumbai. So I think pan-India opportunity, going even beyond India, and beyond, even the present structure. So I think I would say that still very early time to react me on that, but it makes us on the top of the league.
Now, after IT, FMCG is another sector that is staring at potential job losses because of artificial intelligence. Nadir Godrej, the chairperson of Godrej Industries Group, says AI will lead to job cuts in the FMCG sector, but the company will hire only as per its needs. Listen into a snippet of this exclusive conversation.
It's entirely possible, but we are not clearly seeing that as yet. We are also working on AI, and it is possible that the number of jobs will be taken away, but it's also possible that there will be adequate growth coming out of AI and productivity increases. If it is followed by greater demand, then the total number of jobs will be unaffected. This has usually happened in most technological revolutions. Of course, we can't be sure it will be the same this time because AI can replace many, many different human abilities. So it is very hard to predict what will actually happen.
Meanwhile, US President Donald Trump has once again upped the ante against India, and responding to a reporter's question, he has asserted that the US will not be engaging in trade talks with India until the tariff issue is resolved. Let's listen into that exchange.
Just to follow up on the India tariffs, do you expect increased trade negotiations, since you've announced the 50% tariff?
No, not until we get it resolved.
Right. This is meanwhile as we have been seeing that India has refused to back down. But moving on, OpenAI has officially launched ChatGPT-5, the newest version of its advanced AI chatbot. This comes with significant upgrades that are already generating buzz. Touted as OpenAI's most powerful language model yet, GPT-5 promises a faster, smarter, and more user-friendly ChatGPT experience. Let's take a look at this package to learn more about it.
Talking to AI has always felt a bit, robotic. But that's quickly changing with the arrival of OpenAI's ChatGPT-5. Now it can handle much longer conversations, remembers discussion, and picks up right where you left off. Also, no more fiddling with modes, as ChatGPT-5 switches between quick replies and deep reasoning on its own. It's also multimodal, so it understands not just text, but images and voice as well. If you want a particular personality, you've got options like robot, listener, nerd, and more. OpenAI offers ChatGPT-5 with both free and paid options. The free plan gives you basic access to GPT-5's features such as text, voice, and image understanding, ideal for casual users. For those needing more, the Plus plan costs around 2,000 rupees per month, which unlocks extended usage, advanced voice features, and other perks. In fact, Sam Altman also said that India is OpenAI's biggest market. Meanwhile, Elon Musk's team is preparing to launch Grok 5 before year-end. Smarter bots, bigger markets. AI isn't just the future anymore. It's happening right now.
And that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies. Building legacy.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release.
Hello and welcome. Thanks for tuning in to KYC. I'm Harsh Saita and today we're going to be speaking with Kalpataru Projects. It's a strong set of Q1 numbers It's a very strong FY26 guidance as well that they are penciling in. But here's what I want to know about Kalpataru projects. And more so, just trying to understand whether this entire TND space could well be something that you could bet on in a safe manner and still get a good growth, and which players could you bet on. But you know, Kalpataru projects in particular, there have been payment delays that the company has witnessed. So I want to understand whether this can change, this can reverse. Are there any specific segments where they are witnessing this? So that's the other piece. And how much of this is caused by government? What are they doing to shift away from government contracts? So that's the first part. Second, as a result of this, working capital needs are inherently higher. Mind you, in general, in engineering, procurement and construction companies, you will have higher working capital requirements because you will have amounts, chunky amounts stuck up in working capital. That is normal, and therefore your return ratios matter far more. So yes, you will have working capital needs which are inherently higher, yes, but will they continue to increase every year? Is that something that you as an investor should pencil into the cash flow, which will keep a lid with regard to cash flow from operations growing at the same clip as EBITDA will? So that's what I'd want to really understand. The third piece is with regard to water business. Will you see a slowdown with regard to water business? Because this is more government, less private generally. So I want to know if they will ease their focus on the water business at all. They're also doing divestment of non-core, and I'll talk a little bit about that as well. The fourth piece is oil and gas. Now, within the oil and gas space, they're doing a lot of contracts which are export focused and export oriented. That's what they are focusing on. So I'd want to know whether the margins here are better and how large the opportunity is. So if we roll forward, margins in oil and gas versus the blended margin is what I'd want to know. So there are two key factors within Kalpataru projects that I want to talk about. One is the margin number. The second is the ROC. Can the ROC go up, and can the margin number creep up? That's the guidance, and where will that lever come from? So these are the two pieces, and I've just kind of combined the two into one. What stops you from growing at roughly 20% odd? The order book is quite healthy, nearly 3 times book to bill is what they're currently at, and therefore, given that, you'd want that they can grow at a 20% plus clip for a prolonged period of time. Plus, all of the verticals that they have are strong growing as well. They're well in vogue. Oil and gas is well in vogue. Transmission is well in vogue. So you've got those levers to kind of kickstart and keep growth coming. Debt direction, where do we go in terms of that? And last part is selling of non-core assets. They have some non-core assets on their balance sheet, and in order to improve their ROCs, what they're doing is they're trying to sell some of that. So some of those metrics will start to play out in coming years. How much of that comes onto the balance sheet as cash is what I'd want to also understand. But we'll start off with about the company, and we're missing Anushi today, who generally tracks EPC. But let me do the best I can. Let me start off by explaining what exactly does Kalpataru Projects do. It's a leading global EPC player. EPC full form on your screen. Put it in a nutshell, it executes infrastructure, energy projects in 75 countries. It focuses on power T&D, which is transmission and distribution, buildings, water, oil and gas, railways and urban infra. Again, railways and urban infra is a very interesting high growth tilt to the business. Asset light model is what it focuses on. It scales by managing complex projects and not really owning the asset. So they don't do as much of build, own, operate and the like. So that's not really the model that they follow. They generally follow a model where they receive the money upfront and hand over the asset to the government. That's how they prefer playing this. Let me start off also by explaining what are the types of projects that they take on. So first, within the power T&D space, you'll see the various verticals come on the yellow band on top, and then you'll see a description here. In the power T&D space, they build transmission lines, substations, from engineering to installation. They do in-house design, manufacturing, testing of towers as well as equipment. In terms of building and factory, which is their second vertical, they construct residential, industrial, airports, data centers and factories, of course. And outside of that, they offer design, build, and not just construction. So they also offer that part of the service. In terms of water and irrigation, of course, some part of the contracts here are government predominantly. They lay water pipelines, install treatment, storage, they manage supply. They also handle O&M for water systems. So some of these are of course valuable. Oil and gas. Now this is the new possible vertical where there could be strong growth, especially from the export opportunity. So they are installing pipelines, refinery facilities, terminals, compressor stations, all of that. In terms of railways, electrification, track links, signaling, station development, all of that is what they do. That's the broad brief with regard to the services they provide. Let's talk about the order book now. It's at around 65,000 crore, Q1 FY26 of course. It's at an all-time high. Domestic is roughly 59% odd, 41% is international. And here's the order book to bill. That's the more important ratio. And I'm going to talk about that only till FY25. So that's the broad brief with regard to book to bill. Nearly 3 times and has been the case for the last 3 years. So they've consistently maintained that. That's the run rate at which they've been going. Let me talk about order book mix also, because that will give you a tilt with regard to margins, and we'll discuss margins just for a little bit. You look at the power T&D, this is roughly 41% of the current book size of around 65,000 crore. So around 41% is power T&D. That part of the 65,000 crore, so that part is slightly higher and better margin. Building and factory is 22%. That is also better margin. So around 63% of the book is those two. Then you have water, which is 15%, oil and gas, which is 12%. Oil and gas reportedly has the best margin, but of course that question I'm going to pose with the company. And urban infra and railways is around 10% odd. So that's broadly the mix of the order book. In terms of water, 15% of the book, the margins may compress a bit, and that's likely because more so because it's government tilted. So you want to take care of that part, and I want to see as to what the commentary says as well. Let's talk a bit about the business model. And the business model in terms of manufacturing, in-house key component manufacturing of transmission towers, scaffoldings, etc. They have a facility in Raipur and Gandhinagar in India for this. Project execution, well, they have a central project management office in Mumbai, and then they have project teams all over at project sites which manage the project. Last off, there's sales and customers, of course. They sell EPC contracts to governments, PSUs, large private developers and international agencies. They do claim high repeat customers due to track record as well as relationships. So that's the broad brief with regard to a Kalpataru Projects International. Now let me talk about the metrics that we will discuss on a Kalpataru projects. We'll start off with the income statement. We'll thereafter look at the balance sheet, cash flow and return ratios. We'll then look at shareholding patterns, street cred, valuation, street coverage, and they've guided also on a couple of factors. We'll talk about that as well. Let me start off with the income statement. Now you look at the top line and the growth there. It's been around 15% 3-year CAGR. The EBITDA is up by around 13% odd. Margins are largely steady state between 8 and 9% over the last 4 financial years. FY22 9, FY23 9, 8 and 8 for FY24 and 25. And therefore you're seeing a bit of compression on the profitability. So we're not seeing profits grow at that 15% clip as the top line. It's just a 2% profit growth on a CAGR basis. So you want to see more on that profitability number. Now let's talk about the Q1 FY26 numbers. And this is really strong coming in from a Kalpataru. The net profit stood at 200 crore for Q1 FY26. I'm going to pull out the top line number as well in just a minute. So your top line has grown 35%, mind you, on a YOY basis. Your EBITDA is also up a very, very solid 39%. So you're seeing strong growth across the board where a Kalpataru projects stands, 38.6%. Now margins have come in at 8.5% versus an 8.3% same time last year. So your margins have inched up, and that has aided profitability in a very, very strong fashion. In fact, this will mean that FY26 will be a standout year, and we'll dive deeper and understand whether that is actually possible or not. But given the last 3-year performance, we've given this a neutral. We want to wait and watch as to what the guidance is with regard to margin uptick and profitability going forward. But very, very likely there could be a bit of turnaround here. But we've been cautious on this one. Let's look at the balance sheet. Equity, roughly a total equity of around 6,500 crore. It's a 20,000 crore market cap company. It's trading at around 3 times book. Your borrowing is around 4,000 crore, but cash bank balance is around 1,800 crore. And I'm sure a large part of that profit as well would have likely come into this cash balance at the end of FY25. You want to keep your eye out on that as well, because that will mean your net debt has come down. And it has. Your net debt to equity has come down to around 0.3 to 0.2 times roughly at the end of FY25. That will likely continue to come down. We'll understand the debt picture better going forward. Let me talk about the cash flow now. So we've given the balance sheet a neutral as well. Want to see more work being done. Even though the net debt to equity has come off, I want also an outlook on the debt. Cash flow. This is where there's been some bit of pain. Your operating cash flow to EBITDA stands at just about 50%. You want this to likely get better, right? And maybe EBITDA is not the right metric because interest cost is also extremely elevated. But even on the overall numbers, you want operating cash flow to improve. The receivables keep a lid and the working capital keeps a lid on operating cash flow. Again, EBITDA, you have interest taxes that you need to discount for when you do CFO to EBITDA, and therefore, and because this is slightly more capex heavy and slightly higher interest cost that it incurs, therefore the CFO to EBITDA number has squeezed. The net cash flow though remains intact, and that is because of the equity raise it has done last year. It also did its IPO a couple of years back, and it also has done a couple of debt raises and debt repayments as well. So you want to know some of those things when you're looking at the net cash flow picture. The return ratios. The return ratios look all right. The ROC number is roughly 16% and as I did mention, there is a possibility for a positive bias to return ratios, but they've been stable. I'll give them that credit. So therefore, the thumbs up. Let's look at shareholding now. Promoters, roughly 33.5% currently. So we've given this a neutral. FIs have increased their stake. FY23 to FY25, they've really increased their stake. DIS 2, the stake has gone up. Public also, the stake has largely been steady state. So that's the broader picture with regard to shareholding. Neutral on this one. Street cred, 1 month stock price action is -6, 6 months is +8, year to date is -15, 1 year is -10. So shareholders haven't exactly made the best returns. The 1 year shareholder is under some bit of pressure. But since 2023, the stock has more than doubled. So over slightly stretched periods of time, of course, we've seen a better performance from Kalpataru than in the near term. So that's the other thing, and therefore we've given this one a neutral as well. Longer term, okay, but shorter term, some bit of pressure coming in on shareholders. Let's talk about valuations now. And Kalpataru Projects currently trades at around 30 times earnings. KEC, which is its competitor, trades at around 38. And Transrail, which is purely T&D, trades at around 30. You've got 1 year forward, those numbers changing dramatically because of the growth tailwind that's there. Broadly, we've given this a neutral. 2 reasons. One, a 21 times high growth business definitely looks good, but you want to see what happens to the debt picture as well. You want to see what happens to the cash flow picture as well, and whether margins can inch up and the return ratios can inch up. So some of those factors need to be kept in mind. Those are a work in progress, and therefore keeping those in mind along with valuations, you want to be cautious. That's why the neutral. In terms of analyst recommendations, there are 15 buy calls, there are 2 hold calls, no sell calls. There is a 19% return potential which the average Bloomberg analyst expects from this one. 17 analysts track it. So surely not looking bad. A clear thumbs up with regard to this one as well. Let's stack up all of those 8 metrics and give Kalpataru Projects its KYC rating. That's how it stacks up. Cash flow, a bit poor, right? So we've given that a thumbs down. Other than that, everything looks okay. It's all in place and therefore gets a 5 out of 8 on our KYC rating. Now let's go across to management. Let's speak with Mr. Amit Uplenchwar, who's going to be joining us, who's a director at Kalpataru Projects. Welcome, sir. I'm Harsh here. Good speaking with you. Let me start off with working capital. That's the one possible drag on your return ratios. But talk to us about the business itself. Is working capital just a part of the business that you do, and therefore it has to be factored in from an investor lens, or would you look to optimize it? And are there levers to optimize it? And if so, how much?
So, good morning, Harsh.
Good morning, sir.
Thank you very much for having me on your show.
Thank you.
Very, very interesting question. You know, as you follow the EPC business cyclically, you should look at this lens from a constrained perspective. Has cash flow ever constrained the growth of KPIL? And the answer is no, right? If you look at our metrics, today, if you look at amongst our peer group, we are keeping our net working capital days at less than 100, which is at our scale and size with a diversified order book and sectoral as well as geographical spread. I think it's one of the best in the industry. We've also kept our interest cost as a part of our revenue under 2%, which again amongst the entire industry is one of the lowest, which shows a very, very strong balance sheet and extremely low levels of debt in relation to our business. If you look at our third metrics, which is debt to equity on a standalone basis and on a consol basis, today we are at less than 0.47 of our debt to equity, and on a standalone even lower, which is again one of the lowest in the industry to have a near debt-free status on a standalone basis. And we have, like you correctly mentioned on your show, we've had a 15% CAGR over the last several years. And in this year, in Q1, we've done our highest ever revenue at 35% levels of growth on revenue, both on standalone and consol, with pretty much keeping the debt levels at the same that we've been doing. So we've factored the growth through the similar balance sheet levels of debt. So I would say this is one of the best and the strongest balance sheets in the industry ever. And cash flow has never been a constraint for us, with enough and more headroom to grow in the future.
Point taken, sir. So on your cash flow from operations, what should be the pre-cash flow from operations on your PBT number, what should be the drag of working capital that one should pencil in annually?
So I think, Harsh, let's look at this question in a different light, right? Today, as a company which is having 65,000+ crores of order book in hand, and on a lighter note, in this uncertain world, the only certainty that we've provided over the last several years is a very, very stable financial performance in terms of profitability, right? So we are doing close to, last year we were at 4.5% PBT thereabouts. We've already inched up beyond 5 this year, and we've guided at the beginning of the year to go close to 5.5, which is 100 basis point expansion on our PBT levels. And the kind of revenues that we are doing, I think this is one of the highest amongst the peer group. If you do a comparison, at 5.5% close to PBT FY26 closing, I think would be one of the best PBT in the industry at that scale.
No, sir, I completely take your point. I completely take your point on that. Right, sir, let me switch focus. Let me talk about water for a bit. Is there a thought process behind how you will bid for projects within water, keeping in mind what you've just told me, that the PBT margin of around 5.5%, does water fit the bill there? And will you be very, very selective there? And therefore, where does the water mix stand maybe a couple of years from now? Will it come off? Will it stay steady state?
So, Harsh, again, a very interesting question. I think you've analyzed our company. You probably know the numbers better than I do in the way you ask the questions. But in terms of water, we've got 9,000 crores thereabouts of order book that we have on hand. Right? Water is a beyond 5.5.
With the benefit of hindsight, I'm sorry I'm going before the 20% blending target, which we've achieved 5 years in advance. The first target was 10%. And I can share with you some of my anxiety when I was associated with this program, when I got the petroleum and natural gas ministry I was assigned to it, that even when it came to the 10% biofuel blending, I used to have some doubts a little, because we had to achieve it by 2022, I think. And I came on board in 2021 and I said, will we be able to do it? Because my own conditioning was in the pre-2014 period. But no, lo and behold, we got that target 5 months in advance. Then we set ourselves a target of 20%. And now I come to where you asked me, we did that 5 years in advance. But I don't think it is just, Kushan, I don't think it's just the achievement of the target. You can sometimes meet your overall goals, but how you do it. I want to draw your attention to 2 or 3 major changes. One is the diversification of the feed. Earlier, going by the Brazilian experience, Brazil is a country 3 times our land area, 1/6 our population, with 22% of the world's freshwater reserves. For them, sugar is not a problem. And Brazil can, with a little bit of effort, they can increase the area under acreage many times. But we have 6 times the population, 1/3 their area. We have to look at ethanol blending, or I'll come to biogas, I'll come to green hydrogen, with a different set of challenges. And I think a lot of people who said that, you have to look at food security, I used to think even then that was a baloney argument. And now I'm convinced even more. Because in India's case, if you go down the biofuel, who are the beneficiaries? Your farmers, your agricultural sector. What do you save? I'm not just talking about environmental plus points. I'm talking about something else. You save foreign exchange. What did we save? 1,40,000 crores. What did you do? Where did you give the money? You gave 1,20,000 crores or thereabouts to your farmers. And at a time when the rural sector is in, I wouldn't say distress, you used to hear about these challenges, you used to hear about farmers having to face existential. We did a lot of things. We tried to put more money into the farmers' hands. MSP has gone up many times, more crops have come under it. But the biofuels program, excuse me.
Guys. Sorry, sir. Sorry about that, sir.
No, don't worry. But I think he was vying for attention, but I think I've got the floor. So, no. Suddenly you find that when you discuss agrarian issues, the ethanol blending program or the biofuels program has become a very integral part of that. I shudder to think what would happen. I know there is an attempt going on at vilification. I mean, Kushan, you and I have been around a long time. Your father and I used to belong to a different era when we were in the university. We grew up in different time. But now there are vested interests, economic interests. So there's vilification. I saw that vilification campaign even when we were dealing with compressed biogas. अरे ये ठीक नहीं है, वो ठीक नहीं है, गाड़ी बैठ जाएगी, दाम बढ़ जाएगा. अरे भाई, have faith. If you have faith in yourself, you have faith in your biomass, in your agriculture, you have faith in your urja data, annadata, you will find that things will work out. Prices of CNG, when they became high, people told me the manufacturers will not manufacture cars. You have embarrassment of riches. You've got what, 113 CBG plants. I'm not trying to digress, I'm just trying to show the nature of the vilification campaign. You've got another 113 plants operational CBG, another 78 coming. Ethanol, I stopped counting. And they're coming up every day. Today I had a colleague of mine said कि हमारा एक बहुत बड़ा ethanol plant तैयार हो गया. Will you please come to inaugurate it? So ethanol is now got diversified feeds. I have a situation where from 0% use of maize a few years ago, we're at about 40% maize utilization. When they talk of sugar, they don't realize we're not using sugar as in syrup. We are using what is called C-heavy molasses. After you take the sugar syrup out of the cane, then you निचोड़ने को क्या कहते हैं, wrench it, then you get B-heavy molasses. Then when nothing is left ready and you nichodo it more, then you get C-heavy molasses. So you have C-heavy molasses. Our plant in Panipat, the IOCL plant, is making second generation ethanol from parali, agricultural waste. We have a system of giving good news in the cabinet today. I mentioned that yesterday or the day before, Corsair, which is the clean air environmental arm of ICAO, International Civil Aviation Organization, they've certified the use of used cooking oil in the Panipat refinery to make sustainable aviation fuel. We are making ethanol from broken food grain. So I think this is a program which has taken off, and no matter what these in-trend lobbies, I just tell them one thing. I lived in Brazil. The same car manufacturers were operating in Brazil, German, Japanese, the same operating here. Brazil has been on E27 or ethanol mixed in the basic blend up to 27%. Let's stop complaining long back. Yes, the calorific value, the performance of a car may be what, 1% or 2%, maximum 3% less. In the last 5 years, haven't I ever heard of an engine failure? And you've seen these, motivated trolls on social media. They will say that if you put E20, which is available in, God knows, it's come in every petrol pump. We have what, 88,000 pumps in India? E20 is available in every pump, basic feed. In about 400 pumps, we are selling E100 to encourage, it's a chicken and egg story. You make the fuel available, then they make the car for it. The car says, I can't come till the fuel is available. We are going to transverse this. Look, just now we are in a happy situation of having done E20 several years in advance, 5 or 6 years in advance. As we proceed, I am very sure, and we have comfort level with the ecosystem, the feed and everything, we will gradually raise it. What percentage? I'm not a soothsayer. I'm essentially a incrementalist, so we will see how it goes up. But I think the country is yearning for it. Is it more expensive? Arey bhai, suno to sahi.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो बोलिए मैडम, डब्बा टेकिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
Almost about 2 lakh people have received the notices. Artificial intelligence or technology has made things very easy to send out notices quickly. If somebody is earning 15-20 lakhs, why would he do a political donation of 3 lakhs? Any recognized political party, if you do a donation to them, you can claim 100% of the amount as an exemption.
डॉन को पकड़ना मुश्किल ही नहीं, नामुमकिन है.
I think for the last 7-8 years, everybody's file is opened and they are sending blast messages. 18 to 24% is the interest and almost 25% to 100% is the penalty. A lot of people say that I didn't know they were fake, I did with a good generosity. If you deposit 10 lakhs, then I think income tax will come to your house to have that cabbage with you.
They say tax is one of two things in life that is unavoidable, inescapable. That hasn't stopped people from trying. For years, some people have approached tax paying with the tagline immortalized by Amitabh and Shah Rukh. Dawn ko pakadna mushkil hi nahi, namumkin hai. But the problem is that the long arm of the taxman has in fact gotten more efficient. Over the past few months, thousands of notices have been sent out seeking explanation for some inconsistencies. Some of that has to do with rent paid. Other notices are because of tax breaks that were claimed for donations to political parties. And still more because of credit card spends. If you've got such a notice or could potentially get one, this conversation is for you. This is MoneyWise on NDTV Profit, and my name is Alex Matthew. Join me today is Abhishek Mehta, who's a chartered accountant and who has his own firm. Abhishek, thanks so much for joining me today. Absolute pleasure having you. And in fact, I've met a few people who've gotten such notices. They've all come to me and said, what do I do? What do I do? The question is, why do you get it in the first place? Have you heard of a lot?
Yes. So I think this year, almost about 2 lakh people have received the notices. But let me go back a bit. Out of 8 crore people who are filing the returns, income tax considers 99% of them as genuine. That's why we call them as a self-assessment tax. And there are only a couple of 1 or 2% people who try to get these notices. So about 1 to 2 lakh people have got notices on 5 or 7 major reasons. One of them is people who have bought properties. Second is capital gains on F&O, equity shares. Third is political donation. There's a huge drive going against the political donation. Fourth is your credit card spends. Fifth is cash deposits. And sixth is a lot of people have some foreign assets which they are not declaring while filing the returns. And because of a good exchange information with the department and abroad departments, income tax department is getting a lot of asset information of the foreign assets which people are holding. So that is why income tax is sending out these notices and trying to get the exact source of the money from where this is coming.
Let me clarify, is this driven by actual people or is this automated messaging that is going out if certain triggers have been hit? And I'm talking about use of artificial intelligence, use of your annual income statement and all of the data now that the income tax department is pulling.
So almost 70 to 90% is getting automated.
Sure.
Use of artificial intelligence or technology has made things very easy to send out notices quickly. But what income tax is also doing is first they are giving them a chance that, if you want to revise your return, go for an ITRU and revise your return. Because if you know that I've done something wrong, a chance is being given by the income tax department and they are not just starting the scrutiny. And when people are not responding or people are responding that, no, I am correct. And that is the time when they start with the scrutiny process.
And it can get pretty lengthy. It can go all the way to court. We'll discuss a couple of those instances where the claimant or the taxpayer has actually won a case in court. And that happens more often than you would think. But let's talk about some of these instances, right? And One of the most interesting ones that I thought was interesting was the political donations, because people have been claiming, and I do not know what section, you'll be able to tell me, but people have been claiming these donations, but there are also scenarios where I've heard of fake donations being made, a certain cut being taken and money being returned for a receipt that says that you've made a donation. Is this something that occurs?
Yes, so I think most of the political donations, usually when income tax knows that if somebody is an employee and they are doing political donations, there will be very rare chances. If somebody is earning 15-20 lakhs, why would he do a political donation of 3 lakhs? Because section 80 GGC, which allows political donation exemption, doesn't have a higher limit. So somebody earning 20 lakhs, a lot of time also does a 10 lakh political donation and try to claim the entire exemption.
What is the section about first, before we get into why people are getting these notices? What is the section about?
So section is pretty easy. So any any recognized political party, if you do a donation to them, you can claim 100% of the amount as an exemption.
Okay.
So if I'm earning 20 lakhs and I say that I have donated to a X party 20-30 lakh bucks, I can claim the entire exemption.
There's no limit.
There's no limit at all. So people have been using this, tool to evade a lot of taxes, especially employees, because that's where the major taxes are cut. And that's the income tax department has started a very big drive to catch these people. And most of these political parties are not genuine.
But tell me something, and we'll discuss this specific case that stood out in the sale of a house and between a husband and a wife. So the question that I have is that if you have done such a donation, knowing full well that you are getting a tax break and the donation is actually being returned to you after this cut, how does that stand up in the court of law? And I'm saying that ultimately, okay, these are so-called fake political parties, but they are registered as political parties. They've got the certification and they're giving you a receipt. How would it hold up in the court of law?
So it doesn't hold up, because what happens is first they arrest these political parties.
Okay.
And then they take statement from them that whatever donations have come, the cash was returned back to them. So they have a proper written statement. So when you go to the court of law and try to challenge this, even I can say, I didn't know they were fake. A lot of people say that I didn't know they were fake, I did with a good generosity.
Yeah.
It doesn't hold up too much.
Because you've proven that you've gotten the money back.
Yes. In fact, you will get into more trouble, because then they will call you for statement and various things will start, and people don't want to get into that zone. So better to pay off and, or go to appeal, and if there is some amnesty scheme coming, pay the tax and get yourself free out of that.
Especially if it's a large amount of money.
Yes.
Right? Would there be the payment of an interest on tax due in such a situation?
Yes, there will be a penalty also, and there will be interest
How does that work?
So 18 to 24% is the interest, and almost 25% to 100% is the penalty on the amount of tax which you tried to evade.
Wow.
So,
no, but I'm saying in this case, somebody's gotten a notice. And suppose they've done this. Even in that case, if they go back and say, okay, hey, you know what, you mentioned...
Yes, ITRU. You can file a revised return, yes.
So in that case also...
You have to pay the penalty also, the interest also. Both things you have to pay.
How is it determined?
So whatever the amount was there, suppose it was a 17-18 donation.
Yeah.
So almost 8 years have been. So as per 8 years, you have to pay 18% interest on the tax component, plus 25% of that amount additional has to be paid as a penalty.
Wow,
to the income tax department.
And as a chartered accountant, your advice would be that if you have engaged in this, you should go out and pay that up.
100%. Most of the people, what they are doing is they are just trying to play with the time, so that if some amnesty scheme comes, they will file. Because in amnesty scheme, what happens is a lot of time you are getting some rebate on the interest and the penalty side. So people are a lot of time waiting for that amnesty scheme and trying to just take more time, replying the notices or probably filing an appeal. So that's the only... Eventually, you'll have to pay. There's no way out. You cannot say...
And this is only one of several instances where people are getting these notices.
Yes,
so
yes.
The second, incidentally, is where there is credit card spend that is scrutinized.
Yes.
Now, this is an interesting thing, because you and I both know there are so many videos out there that talk about how to generate points quickly, and people tend to pay for their family right? So if you are booking flight tickets for your family or you're booking a hotel for your family, you pay and it all gets paid to you eventually. So is that the kind of thing that can cause you to get a tax notice?
Yes. So mostly people who have done a credit card swipe of more than 10 lakhs are getting these kind of notices where they have been told to know the source of the income. So how did they make the payment? So if you have made a payment of 20 lakhs on the credit card, they're asking for the source.
Sure.
So if you have used your friends, if I am booking for you supposedly that ticket, you or me are not related. And if you are sending me some money, that might get taxed as an income.
All right, so that's credit cards. And so therefore have your rationale or your reasons ready for why you've spent more than 10 lakhs, right? Or very large amount. You mentioned capital gains arising out of futures and options.
Yes.
Why is this problematic?
Because what happens in capital gain, the premiums are very less. In case of FNOs, the premiums are very less, but the turnover is very high. So when your turnover is very high, obviously it gets red flagged. And that's the time when income tax starts sending more notices. So people tend to avoid taxes on their capital gains or on their FNO income. They try to give it in the capital gain. Whereas FNO, even a 1 rupee income, it should be clubbed in a business income. It's a business income purely, and people don't want to go to that route because like you are an employee, so you don't want to file a business income.
So the simple rule here is that if you are engaged in futures and options trading, and if you are making even a single rupee of income, then you need to go into the relevant ITR form and file as business income and not any other. And if you don't do this, then you will likely get a notice for previous year where you filed it under the wrong section, right?
Yes.
Okay. You mentioned sale of houses, and we'll talk about this in more detail. So actually, before we get to that, let's talk about the foreign ownership.
Yes.
You mentioned that as well. And this has to do, as you've pointed out, with ESOPs that you might have gotten in companies abroad. Is that what you're saying?
So a lot of times in India, like the holding companies are outside. So people get ESOPs of their holding companies, which probably might be US, Canada or any European countries. And they don't show it in India. Whereas you have to compulsorily, if you have even 1 rupee as a foreign asset, you have to compulsorily declare it in the FATCA, and people avoid it. So that is where a lot of income tax notices have started.
Sorry, you mentioned FATCA. What is FATCA?
Foreign asset declaration. Basically, if you have a bank account in US, you have a bank account in UK, a lot of time also what's happened, like an employee of TCS might go for a year to UK, so he might have some bank account there. Which is still active. He has come back to India, there would be some 100, 200 pounds left there. But he has to declare it in India. Even if there is a 100 pound, if you hold any foreign asset, you have to declare.
And then?
But majority of the notices are being issued for the ESOPs. Because if ESOP was issued in foreign, what happens is people don't pay tax in India. They should be taxed as perquisites. So, but people try to avoid those taxes by not showing it that they got some ESOPs or they have some bank accounts in Singapore, US, and they try to avoid all these gaps. But luckily, with the kind of exchange of information which today Income Tax Department has, it's very high, and they are getting all those statements, all those
So just a clarification on this. It is relevant that you have ESOPs if they were issued in a year when you were a resident of India.
Yes.
Is that right? If they were issued in a year or vested in a year when you were not a resident of India, does the rule still apply?
Still applies, but you have to show it in your income tax. You have come down to India, you still hold some stocks in US, so you have to declare that in your income tax. If you're not declaring, then that's the issue.
What are the implications from a tax perspective on declaration?
So what government will try to do is they will find out how did you purchase these ESOPs. So if you were in India at that time and your ESOPs were granted, did you pay the tax or not? You were in US, the ESOPs were granted, you can provide the explanation and get out of it. But that's where government is trying to catch people where they were in India, they were granted ESOPs outside, or probably somebody sold their ESOPs. But they didn't show it at capital gains because there's almost 20% tax on that. And that is the time when income tax starts sending the notices.
So it's a matter of dotting your I's and crossing your T's. I nearly said the opposite thing, but anyway, lucky that my brain is not playing tricks on me. But having said that, let's talk about one more, which is you said cash deposits.
Yes.
I don't know how many people are doing that. I haven't heard of many now doing cash deposits. Does it still happen?
But a lot of business people keep withdrawing cash and depositing cash. And if the cash deposit is more than 5-10 lakhs, income tax is just trying to ask them what is the source of this cash.
Sure.
Because if supposedly you sold some property, you got 5-10 lakhs cash and you're trying to deposit that, then income tax will come to know, because you have to have a source of that cash, whether it came from selling some gold, whether it came from, whatever source. But
people have been selling vegetables or claiming to have sold vegetables and using that as...
Yeah, so they are showing it as agriculture income.
Yeah.
But if you are showing an agriculture income, you have to have the receipts of the agriculture income. You have to have the land in your name, or probably an agreement which states that that land has been rented out.
So I can't grow cabbages in my balcony and sell them and use that as...
What would be the amount of that? 10,000, 20,000?
They're very good cabbages, Abhishek.
But if you deposit 10 lakhs, then I think income tax will come to your house to have that cabbage with you.
That's a good point. Okay, so you need to have valid proof of having generated that kind of cash, right? Okay, let's talk about the last thing, because that will lead us to the next leg of this conversation, which is how to deal with the sale of real estate.
Sale also and purchase also.
And purchase.
Yes.
So why could people be getting notices for sale and purchase of real estate?
So for purchase, mostly it's again what's the source. And especially NRI people have received a lot of notices. What they had done is, in the earlier 7-8 years, they had sent money probably from Dubai. They were working in Dubai, Europe, US, Canada, anywhere. And they were sending money to India and purchasing these properties. Income tax have started initiating the notices. Why? Because their Indian income is zero, which is true. But they want to still know the source of income, that how did they get that 1 crore or 2 crore to purchase the property. So a lot of NRI people have started receiving notices on the purchase of property. Even though the source is legitimate, they still want to go inside and in depth and check if there is any hanky-pankiness in purchasing this property, whether the individual was actually an NRI at the time when he sent that money from any part of the country. That is why income tax is behind people who are purchasing properties in larger chunks.
Now, this NRI situation is quite problematic, because when you are a buyer from an NRI, the onus is on you as the buyer to deduct tax. Is that right? And if you don't deduct tax because the individual has not told you that they are NRI, which they should be doing, then you can be liable and you can have to pay a penalty. Is that right?
That's right. You have to deduct about 12.5% in TDS
of
today.
Of the total amount?
Of the total amount. So if an NRI probably purchased a property at 4 crores, he's selling at 5 crores, but the 12.5% will be deducted at the entire proceeds of 5 crores.
But you as a buyer can get a notice from the tax department asking you to explain why you did not collect
Yes.
TDS.
If I have sent the money in his NRE or NRO account and I have not deducted the TDS at the right rate, so if the property was, the NRI was holding the property for less than 24 months, I had to deduct 30%.
Sure.
If he holded the property for more than 24 months, I had to deduct 12.5% plus surcharge plus cess.
Right.
And if I don't do that, then I'm in problem, and income tax TDS department might start prosecution against me.
And you could have to pay penalties on the amount that you... What are the kind of penalties you would have to pay?
Again, 100% of the entire amount. So
100% of the entire amount?
Yes, it can go 100 to 200% is the penalties, which are range of... And problem is that in income tax, there is very less arrest. But in TDS, if you try to play around with TDS, the chances of arrest is very high.
Okay, so... Therefore, when you are buying a house from anybody and it's a secondary sale, obviously when you're dealing with a developer, you don't have to deal with this. You need to ask whether they are NRI. But if they are not forthright with that information, is there a way for you to check that they are NRI?
See, mostly how do we check is that are we sending the money to his savings account or are we sending it to the NRE?
How do you know
account?
the difference?
When he sends the check that you need to transfer to this account, so obviously the account type is written that this is an NRE, NRO or a savings account. So that is the time 90% of the times we come to know whether this guy is actually an NRI or an
Is
individual.
it possible that they give you an Indian bank account to transfer it and they can still be an NRI?
Yes, that is possible.
So and then you're still liable to pay TDS? I mean, not TDS, but collect TDS.
Yes, but mostly I will not come to know. If somebody is lying to me, I will not come to know.
So then what is your defense? I'm saying, what is your defense as a buyer, as a buyer from an NRI if they do not disclose to you because they don't want that tax to be deducted, so they don't inform you? What is your defense?
So I think when such notices come, you can actually reply to them stating that, you know, the buyer didn't inform us that he was an NRI or an NRE, NRO account holder. He gave us a savings account and we transferred the money to the savings account. So now the prosecution will be started against the NRI person.
Hopefully.
Yes, because he gave the wrong bank details to get the money transferred.
So that if the wrong bank details are given, that is there any other way to check if a person is NRI?
Not much, whether he's an NRI, NRI, because every year the status can change.
Yeah.
You know, it's not like a passport, whether he has an Indian passport, whether he's a, you know, some foreign passport or other than different passports. But in PAN, it's very difficult to know whether that person is resident.
No, exactly,
or not
because you need to have spent a certain amount of time in India. If you've not, then you effectively in that financial year become NRI.
Yes.
Right? So okay, so it's complicated. So therefore, viewers should bear this in mind. If somebody is giving you an NRE, NRO account, then of course you need to be collecting tax or deducting tax at source. If they're giving you a savings bank account, then that is your defense. And that's the only thing that I can say.
Just one hack for the NRIs who are selling their property and giving the NRE, NRO account, they can apply for a lower TDS deduction certificate.
I do want to talk about a few ways in which people should, because I got an interesting query. Okay, so the query that I got, and this is not related to tax notices, is related to sale of property. The query I got was, if you are selling a house that was redeveloped, does the value at redevelopment count as your starting point for the calculation of capital gains tax, or does the original cost of the property get calculated? And how do you choose between the indexation benefit at 20% or 12.5% flat rate?
Right. So the answer to this is you will fall into one of the three buckets. The first bucket is, did you purchase the original house before 1st April 2001? Or you purchased the original house between 2001 and 2024, 23rd July 24, and whether you purchased it afterwards. In the first case, if you have purchased the house before 2001, what will happen is you have to calculate an FMV, which is a fair market value as on 1st April 2001.
That's when the index starts.
That's where the indexation starts. And from there, you can calculate how much is your index cost. Now for benefit, what is indexation? Basically, government says that whatever the inflation rate is every year, let's increase your price of the property by that much rate. So almost about 4 to 5% is the annual indexation. So if you have bought something at 100 rupees in 2001, today it costs about 200 or 250 rupees as per the index cost. And if you sell it at 300 bucks, so government say only pay on this difference.
Between 200 and 300. 200 so 100 rupees and 300. Not 200 rupees.
Yes. So you have two options. Either if you have purchased for 100 and sold it for 300, you pay 12.5% without claiming any indexation benefit, or you pay 20% with indexation benefit.
So the simple answer, I think, in this case would be to calculate the two and see whichever is less, you pay that.
Yes.
Right? Now, a couple more things, because there was an interesting story recently about a couple that went all the way to court to settle a dispute because the wife sold a property and used the proceeds of that property to buy a property from her husband.
Yes.
And avoided paying any capital gains tax.
Right.
And the tax department was like, hey, that's not allowed. But the court allowed it.
Yes. So that was a very interesting case. What that lady did was, she got a gift from her husband, a house. Okay. When you get a gift, now whenever I sell that house, because it's a gift and from a husband, it's completely tax-free, first thing. Now when I sell the house, I will have to pay the capital gain. So the wife had to pay the capital gain tax. She sold 2 houses. She got about 6 crores in receipts. Now what she did is, her husband holded one more house, which she bought from the husband itself, and paid the husband 6 crores and claimed the entire deduction under section 54, and that the capital gain came to 0. Now what happened in this case is, assessing officer first rejected this claim. She went to CIT appeals. Again, CIT appeals rejected the claim. Then she went to ITAT. Luckily, ITAT allowed this and said this is proper. Why? Because she has purchased the property properly.
So transfer of ownership takes place.
The transfer of ownership is there. Stamp duty has been paid. Payment has been made properly. Then why she should not be allowed the deduction under section 54?
So this is a loophole that has been used, and it has been used effectively. I wonder if legislation will come in to correct this.
Yes.
So that's one thing to bear in mind. The last thing I want to talk about, because we were talking about it on the way to studio, is that there are certain things that you can do to reduce the capital gains that you pay at the end. And one important point that you made was you can actually save the receipts from anything that you spend on beautifying the house, including furniture and structural repair. How does that work? It's through the life cycle of the house.
Yes. So when you calculate the capital gains, what happens is you have to reduce 2-3 expenses. The first expense is your cost of acquisition. That's the first expense you have to deduct while calculating the capital gain. The second is whatever charges have been incurred while selling. So if you have paid any society transfer fees, you have paid your brokerage, all those expenses can be claimed to reduce your capital gain. And the third is your cost of improvement. So if you have spent anything on your house to improve the house, basically your furniture, painting and all these things, you can claim that as well in the deduction while calculating your capital gains. Only thing to keep in mind is you have to have your proper bank statements where you show that the payments were made and the bills of these house improvements, and then you can easily claim all these expenses while calculating your capital gains.
Another reason for you to keep a good file with all of your receipts, as painful as it sounds. Thank you so much for joining me today, Abhishek. Absolute pleasure having you.
Thank you so much.
This has been a fascinating conversation. You can always talk a little bit more about taxes, and I'm sure you would like to hear more on the subject as well. Let us know what you think and what you'd like to listen to. Thanks so much for tuning in. This is NDTV Profit.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा टेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a
Hello and welcome to NDTV Profit. So we're here at State Bank of India after the bank has announced its Q1 results, and I have the pleasure of talking to Mr. C.S. Sethi, the chairman of the bank. Mr. Sethi, welcome to this conversation. I'll start this with the first question on profitability. You've reported a 13% increase, year-on-year increase on the net profit side, while the NII remains flat-ish. You've seen that growth come in because of the non-interest income. Can you tell us a little bit more about how this profitability is coming through for SBI?
Growth obviously, supported by the treasury gains, and we, as you know, we have the largest securities book, right? So we have used our treasury operations